What's up, everybody? Good morning. What am I doing waking up to NASDAQ down almost 4%? We got everything covered today. We'll talk about it all. What a day. You got to love our rules. Wake up. Oh, man. Our rules are good. I mean, within a minute of yesterday's market open, NASDAQ is piercing through its DD bands. It's just, that's my automatic sit-out signal on this. For the overnight, at least. So today, I'm going to be looking for long, strong pivots. I can find them and small trades only. You know how the game is played. Was this close to hitting circuit breakers? No. Maybe like 60% of the way there. But this is probably the biggest single-day move we've had in a while. Since at least this is maybe as bad as August was, the August 1st crash, but we'll see. Circuit breakers overnight are now 7%, I believe, up and down. They used to be 5%. Ooh, I mean, this is just crazy. That was great. It's crazy. Crazy start. What's up, guys? Hit that like button. Don't forget, bottom right, we're doing a giveaway today. Let's set all that up. Giveaway Elite Trader Funding. Supposed to do it on Friday, but I wasn't here on Friday. All right. Do this, what's it called? All right, you guys, let me get the not static, one step. Why do you keep saying static? Oh well. You guys know the drill. Boom. All right. Wait, missing into. Oh. Hold on. All right. What's up, y'all? All right, let's talk about it. AI chipset wars, need more tariffs. Yeah, just, crazy. Market crashing on AI stuff. This is not a big deal. Might be a big deal in the next couple days or whatever, but China been using TikTok. I'm just gonna make up some theories here. China's been using TikTok to steal information and train AI models, and then they supposedly, enter the space with an AI similar to ChatGPT. And there's people like claiming rip-off bootlegs, and America's, bubble that we have around the AI industry somehow has just been thwarted. Our global dominance now undercut by Chinese development. Crash in the market because of the dependency of our stock market on the tech boom right now. See, this is where it becomes interesting in this environment. There were times in our lifetime when it wasn't tech that was leading the path. There was a time when banking were the top companies. This is like after the last recession. There was a time before that when oil companies were the top company in the mid 2000s, right? And oil was $150 a barrel. Now it's tech. So like little noise on tech, and the Nasdaq drops 4%. Now here's the thing: S&P is not down as much, but let me show you guys something cool. Y'all are rocket scooter fans and friends here, right? We have these impact red lines that we draw. Okay, these things are high volume pivots. Now again, we blasted through all of them, but you can see this pivot that we draw. Actually, that one's already been. This one right here. This is the cool one. Look. This little guy right here. Calculations. One of our class. We show you how to do it. Look at this. One of our classes. We'll show you how to look right here. Right here. I keep history of them because they're always pivots. And there's that yellow line on top of it. Look how cool that is. Is today a new options month? No, it was last Monday, I believe. Is it today? I've been out of the loop for a couple of days. Hold on. What is today? It was 2 Fridays ago. It's a lot of time has passed. It was last few Mondays ago. Last Monday, sorry. Look at that. 59.50. Right on the dot. That's insane. That's insane, right? Let's look at the activity there. Let's see if we tap velocity like, no, we didn't. Okay, cool. Cool. Look at the futures open yesterday. Yeah, I know, 100%. Look at this. We gapped extremely far down. Now, you guys know the risk interval, right? With rocket scooter, y'all know how this works. Now, I'm not going to lie. It'd be so funny if this is like ends up way back up here by the start of the day. Like that's just some overshoot. Because honestly, this shouldn't be crashing the whole stock market and earnings. This is an opportunity, a good one actually. And I need an entry, and I'm happy trading very small today though. But look, one of the things that we talk about is our DD bands. This is one risk interval lower off the close. Anytime you're below it, markets are irrational. And then down in here, I trade off of strong pivots only. That's it. Only long side. I don't short down here. I just sit out and get out of the way. And guess what? Market opens. And I'm like, all right, screw you guys. I'm going home. I'm going to take it easy. I'm going to call it a night. I don't touch it. And then it's like, okay, as neat as it sounded to be like, oh, maybe you can buy this dip and let it fill. We know the rules here. And we sail away 21,650. I didn't touch this thing. And we're all around to 27. We've all 1,000 more points. This is what's so great about Rocket Scooter. We're the risk management champions of fucking planet Earth for retail. You cannot argue with that. When you're outside of this band, it is irrational. 100%. I love it. I love it, love it, love it. So here's the rule. Ready for this? Here's the rule. Hold up. Don't forget to say, hey, guys, hit that thumbs up button on the bottom left. You guys owe me. Y'all owe me some love. Even on Friday when I wasn't streaming, I still stopped. You know, stopped what I was doing. I was with my mom. Mom is in the hospital a little bit. Pulled over to coffee shop. Still jumped in. Give you guys a little insight on the market. So watch this. Ready? Green bands. Outside of these bands, no shorting. Even though market's crashing, you'll be like, well, I can make all this money shorting. Listen. This is a danger indicator. You're irrational. Market is outside of this band, pre-market, no shorting, nothing. Don't chase it. Just let it fall. That's what I did. Stand aside, let it fall. Next thing is long only, small positions, very small, long only, and only under these conditions, small. And here's what I'm going to tell you what this adds up to. Under only strong pivots, only strong pivots. And the strong pivots are as follows. They are MHP. We're going to look for it today on my screen. MHP is this little orange line here. Hold on. Let's see on the liquidity map. Only on MHP, only on bull zone bottoms, and only on bear zone tops. These are liquidity maps. So they don't show up until the morning. So bull zone bottom, bear zone top, MHP. We touch whatever it is, we're going to tap it. I'll look for longs there, right? However, in the overnight, we don't have anything. So because there's no shorting period and I'm only longing on pivots that come at 9:30, therefore, it automatically states it doesn't qualify for any trade. So as the market's falling and dipping and falling and dipping, it's the danger alert. It's the sit out alert, right? So I didn't do anything. So there, and I went out to steak dinner. And you fucking people, I love y'all. Y'all are so funny. I gotta clear my name here, okay? I got trolled so hard last night by all of y'all, and I'm gonna show you guys something funny while we're waiting for market to open. Y'all are a bunch of dicks. I love it. All right, check it. So IDOC's back. She was out of town for 2 weeks. We decided to go out, have a date like to celebrate. She did this thing at work kind of thing. We're celebrating it. So we go out. We go out to this restaurant. It's really nice called Drake's Hollywood. It's like a old Hollywood style restaurant. You guys know the IDOC. No, y'all know the girlfriend. Y'all hear about her like on a daily. She's always here in the stream. Hold on, where's my thing here? Hello. Oh, here it is. You got the IDOC. Me and her got. So I'm like, you know what? Someone's shorting a 3% move. Yeah, like getting in there and touching it. Yeah, the steak. Yeah, plants. Shut up, dude. I fucking hate you guys. Look, I went and get a steak. Right now, again, you guys have been to like Peter Luger's, right? This is like trying to copy what that is. Y'all been to New York. So the steak, it's funny that it's the angle of the steak. I got trolled so hard because the steak is kind of like this, right? They slice it like that, and it's sitting here kind of like three-dimensionally. You see the crust because it's an angle like this, and then you see the rim. But what you don't see is the inside of it looks like you see the inside of the steak, but you really don't. This thing is about 2 inches tall. It's huge. So, and the slices are just like angled in such a way that everybody here was asking me. It was so funny, the things they were saying. Watch, let me read what you guys are saying. Hold on. Like, nice beef jerky, man. No, they were like, you're perfectly good steak. Just burn it just for farming engagement. What an animal. Look at this. People are just like, hold on, wait. Let me find some funny. Well done, bro. Still chewing that steak. It was hilarious. So let me find some of the funnier comments. Hold on. You were like, Matt orders beef jerky. You part of. Oops. There was one. Anyways, yeah. So people were like trolling me really hard. So, but the steak was like angled in a certain way. The thing is just nice and juicy and red in the middle, the way that I like it. Oh, so lovely. But the way it was stacked was perfectly hiding the redness in the middle. So, if you ever go to like Peter Luger's in New York, right? It's like, they slice the steak on the plate in that bubbling, boiling butter. It's like the same kind of thing they tried to do. And they just gently tilted it just enough where it was like, eek. It was just like a little bit to where you couldn't. And so the comments were funny. They were like, Matt has to cancel the stream. Still chewing his steak. It was really funny. So, so the funny thing was, it's just the way it was angled to where, and I looked at it, and then iDoc posted in her Instagram, and people were trolling her too, and we were like, "What the heck?" It was perfectly medium rare. Just the way it was, it was rind. It was like, okay, I get it. I was like, look, I'm from Texas, okay? If I go out there and order a well-done steak, I'll have to kick my own ass and leave Texas because that's a crime down here. So, super juicy, super rare is a bone-in Wagyu filet. It was so good, so tender. It was like really delicious. But anyways, I went and had a steak last night. I was like, fuck this market. I'm out. So anytime you're outside of these DD bands, right? You guys know the rules. One risk and roll from yesterday's close. Anytime you're outside the band, it's an automatic sit out. So we're sitting out here. Long only on strong pivots. So I'm gonna look for those today. This kind of like DeepSeek AI thing. Long story short, China emerges. If you guys are just tuning in, China emerges with their own Chat GTP style AI that has been hundreds of millions of dollars pumped into this thing to train this thing and teach this thing. It's just like the idea is what's going to go on if we don't, America has kind of like a superiority dominance in the AI industry. There's a bubble around us, all the companies working on it, and all of a sudden China emerges with this trained AI. Like, my theories, through the roof. Have you been trading an AI bot with all the CapCut and TikTok logins, all the captchas we've been doing? Have we been training Chinese AI bots this whole time? Market didn't like that because the tech stocks are such a huge part of our entire index market cap. Clearly, that was enough to drop the market 4% overnight. And we know the rules here. Anytime you bust outside those DD bands overnight, you're going to sit out. That's just the rule. And the market does this. We gap down to here, and immediately the first thing I'm saying is, well, guys, it's a sit out day. And we are so fucking good here. We are so good at what we do. It is nobody in our group is out there sitting there trying to go out there and manage. Now, I don't tell people what to do, but they are trained traders here. So trained. So how many people in chat? I'm going to hear in chat. Type it up. Did you do anything last night or buy this dip, or did you just wait and chill? Look at this. If you waited and chilled, like, tell me. I waited and chilled. I didn't do anything. Let me know. You sit here right now. Now you got all your money in your pocket. Now the market's gotten cheaper. Now the stocks are going to gap down and be cheaper. And now it's an opportunity. The best thing you can ever do as a trader is hope for a day like this and hope that you didn't lose anything. Because now you're ready to attack this market at a 4% discount, which is amazing, right? Amazing. DD break on Discord. Don't trade on Sundays. Shorted on a retest. Somebody came in, or Benjamin came in and took a short or whatever. Either way, whenever you come in to the market in the overnight and you break these bands, you stay out of the way. And again, there's a rule for that, and let it fall. Long pivots only, and there were no long pivots in the way. Everything's dead. So let the market do its thing. And Nasdaq fell so hard that even the S&P clobbered through its bands eventually as well. So we know that rule. That impact, that run length line there. 59.70, good support. VIX has just gone through the roof. Now let's talk about it. Are we in a VIX catalyst today? I mean, VIX risk interval. 1656, 1852 is not enough, but we are definitely in what's called a catalyst scenario on S&P and Nasdaq. So let me show you how this works. Okay. When a catalyst is active, there's absolutely no trading. That's kind of the rule. And we're going to do, here's a trick. I want you guys to all do this. Okay. I want you to go to your Rocket Scooter platform. If you guys need access to the stuff, let me know. If you're new to the group, let me know. You're going to go here and click this bottom thing, RI/GD. You're going to scroll down and find NASDAQ and S&P. Okay. And you're going to find this little number right here, risk interval, 42 on the S&P. And you're going to draw a little bitty box or whatever you want to do of a distance of 42. Okay. Okay, that's a distance of 42. This box of 42. From here, when you continue to trade down, you're going to draw a little pink line right here. I draw mine pink, whatever color you want it. And this is catalyst. We have a rule, absolutely no trading when the market's catalyst. The gap doesn't count. As the market's open, they open at a liquid spot. So the IOP open at a liquid spot. You're talking about 42 points of illiquidity starting from here. We're going to draw a couple extra lines to go with it. From here, first impact. That's the bigger one. And then we're going to do here. So that pink line, anything below that pink line, the market's going to have a catalyst. I'm going to show you something cool in just a second. Now from here, this is the best trick in the world. You guys are going to learn something from me today. Let's go. All the way down here. Return pivot today. Right here. I don't do any trading this far down. It's one of the things I don't do. So what I'm going to do is I'm going to put this guy right here. I'm going to leave it like this. I'll just come back to it later. Okay. So catalyst is active 6061. We'll come back here to my platform. My platform. I draw a line on 6061 just to remind myself of that. Isn't that crazy? Wait, was it 6061? Yeah. Oh, wow, 15 minutes of market opens. We're early today. Early today, boys. Okay, there it is. Cat is active. I got a lot of lines on my chart here. Some of that. That. Do the same thing in NASDAQ. Rocket Scooter says NASDAQ is, what's that number? 5850. All right, so go here. A little box. 158.50. 21.000. We'll check that. 158.50. Yep. NASDAQ is. What a crazy day. All right. Nope. Yep. NASDAQ started somewhere else. Okay. NASDAQ started there. Okay. Oops. Mm-mm-mm. 150. All right, get this really quick. $523.75. Okay. All right, so anything below here, you're gonna watch. There's gonna be something interesting that happens. I'm gonna show you guys some cool tricks while we're waiting. Elite Trader Funding giveaway today. Don't forget to enter. Watch what the bot is saying. Giveaway today. Go to our Discord. Click that enter button. You have to be here to enter, and you have to be here at 11:15 to win the prize. It's 3 100K end of day accounts. Whatever the bot says. I said static, but it's not static. It is something else. Hold on, let me change that. One step. All right, let's go here. Wait. So when we do the drawing, you have to be here to win. I know it's a couple $100 worth of value per account. Pretty nice, nice, nice. One step. Let's buy here. 523.75. And we're clean here. So all the way down here, there's a catalyst that's active. What happens when the catalyst is active is that the VIX goes out of control. So like within minutes, the interesting thing is that within minutes of the market opening, it was just already starting to fall out. And so at exactly around, I guess when they say the catalyst is active, let's start seeing what happened about 22 o'clock. At 22 o'clock, you're going to see some interesting things in the VIX. The minute you break through that purple line, one neat observation that you'll have is what happens with the VIX. So right about 2200 o'clock is when we saw it. And the VIX started rapidly. See how the VIX was nice and stable? And then it started rapidly picking up. So catalysts can cause markets to fall apart, and this unusual volatility that came out of it started ramping up right about that same time the catalyst was active. So VIX popped and VIX was nice and stable. But the minute that the market starts moving that distance, volatility ramped up very quickly, like over the course of the hour. And the market wasn't even collapsing over the course of the hour. Look, it was just testing the bottom. So from 22 to like 23, just this little tiny move here was enough to build a lot of volatility in the market. Like you started going from 17.2 almost up to 17.8, and then just breaking through that, right? 3:30 in the morning till about 5 in the morning. You can see that the market just kind of falls apart. Markets catalyze. When they catalyze, it starts to speed up as it falls. So there's curvature. You can all see that it's curving, right? Catalyst active. We have a rule here. It's an automatic sit out. That's our rule. So you don't even play with it. So like, people here, awesome traders that you are, didn't fuck up your trading accounts today. You know what I'm saying? Y'all are so good at this. What a crazy day, y'all. Where'd the music go? I don't know. My computer's being funky today. It keeps disconnecting from my speakers. I think you guys can hear it, but I can't hear it. Oh, y'all can hear it. I can't hear it. Okay. Perfect. All right. So what we're going to do today, got our cat numbers here. Market opening in 9 minutes. So I do have a rule, basically, down here, longs only down here. So when a cat is active, I don't actually do any trading. So this is the area where volatility is just through the roof and crazy. So this is my sit out rule permanently, right, for the day. But I usually will like to reclaim trading inside of here. Long only small trades if we reclaim. So when markets are collapsing, right? Don't think that you're a hero. Again, do whatever you want. Don't listen to me. Don't think you're a hero trying to catch a falling knife or whatever. I don't think that this market's collapsing at all. As a matter of fact, this is just one thing, and this is the high probability that this market could go right back up to here today. Maybe not as far as going all the way back up because, Chinese competing in the AI space is pretty devastating to the American AI companies. So, but very much so before earnings, this could make its way back up here within a couple of days. So what I'm doing is I'm going to sit out below when the cat is active because volatility is enormous. And the drawdown is just crazy. I don't want to be upside down, 600 or 700 points in NASDAQ in the course of an hour. So what I want to do is I'm going to wait for this. I'm going to take long only trades if we reclaim. And then back inside the band, things are clean. So cat is active. You guys know we sit out. And I gave you guys the levels, right? Give you all those levels, baby. Catalyst is active. Save your trading account. Come back tomorrow or be just cool. So there's S&P. So these are the levels. I'm going to type them in Discord. Don't forget to go to our Discord if you guys haven't yet. Bot's posting some link to it. 61, 61. And then we talk in Discord, right? Catalyst. I'm not shorting, not long, and not doing anything. I'm waiting, but I have a plan. I do have a plan in case we get back to the level that makes sense. But down in here is just not the time to be a hero. Now, sometimes I'll bend the rules a tiny little bit. Tiny. And I'm talking tiny. I'm talking micros. Let's even get ready for micros in Q. All right, we're going to do some micros here. Micros. So my normal small positions, like 1 to 2 minis, this small position is going to be like a couple of micros. The volatility and span is long enough that when I know the market can move hundreds of points, I'm not in there trying to gamble the farm. I'll trade a couple of micros. Remember, if the Nasdaq moves 10 points on my normal position of 1 mini, that's $200. Or my small position, 1 mini. If it's moving 100 points, 1 micro is also $200 for 100. It's a tenth. So allowing myself to make a couple $100 on a micro over that span, it's $20, say, or not. Sorry, did I do this wrong? $200 for 10 points on a mini. A micro is a tenth of that. So every 100 points. Does that make sense? Nasdaq is $20 a point. 10 points is 200 per contract. So if I trade micros, a big span allows me to throttle my gain and loss in that same amount of distance. That same amount of profit and loss to keep it consistent. It's what I normally do, but when the market is crazy. Now, if I find a nice, strong, long pivot only, I'll tap it with like 2 micros to break my catalyst rule with cat active. I don't ever trade down in here, but boy, this would be juicy. This is a binary event with 1 industry and 1 product. This is not going to crash the American stock market. $60.61. Oh, I'm sorry. I put the wrong place. $60.61. My bad. Typo. Sorry. Oh, my bad. I'm such an idiot. Why didn't? You know why? Because I had it right here. I was looking at that line. Oops, my bad. 66. There's a visual cue that went bad there. All right, we open it in 4 minutes. Same rules apply. Okay. So when a cat is active, the rule is to sit out. But sometimes I bend the rule. I have a hidden trade position I do instead of normal, medium, small, sit out. I can inject something called a very small, when I can make a judgment call that the U.S. stock market isn't crashing today. The tech industry is crashing today. I don't know if this is going to affect GE or Ford or, Goldman Sachs, Johnson & Johnson, Costco. I don't think any of these companies are affected by this. So it seems to be an overreaction to like one thing. And so I'm going to be looking for opportunities today. However, we have a sit out rule down in here. So I'm going to invoke my rule today, which I'm going to call the very small trade. The very small trade is micros only. And here's how it works, right? Normally my stop in NASDAQ and S&P is respectively is 40 points and 10 points. On my small position in 40 points is, let's just say, let's use one as an example. That's $800 per mini on a stop loss. Okay. For my very small position on S&P, it's 2 minis, and at 10 points, that is $1,000 per 2 minis. Okay, that's my normal small trade. You see my normal trades I've been taking are usually my losses are around there, somewhat bigger, but around that area. All right, we open it in 2 minutes. So in the very small, just cut it in half because the market can move, 10 times that distance, I'm going to trade bigger, wider, and smaller. So instead, I'll do, for the NASDAQ, if 40 points is to be 800 on one mini, then we're not going to have 40 points as a stop loss here. Instead, what I'm going to do is I'm going to allow myself hundreds of points of swing on NASDAQ and trade micros for the same amount. Because like I was teaching just a second ago, just to remind you guys, if a 10-point move on NASDAQ is $200 per mini, it's only 20 points per or $20 per micro. So if I expect the NASDAQ to be moving hundreds of points and hundreds of points of drawdowns, if I take one micro, then 100 points is $200 or 100 points. So it gives me a lot of flexibility. If I decide to trade when there's a no trade rule in play, but I find a long, strong pivot because this fell on a catalyst for one industry, it's probably a good opportunity. Maybe not today, but at least tomorrow. If we're at MHP only, something good. If we're right at MHP or we're right at a bull zone bottom, I'll tap it with 2 micros only. And again, if it flies back up, I only make $1,000 or something. If it falls down, I lose $200 or something. You know, it's the way to do it. But the idea is ultra small position size. We have a very, very small. We don't even teach this. I would recommend not doing what I'm going to do at all. At all. iDoc talk burrito. I'll take one. Volatility because of China AI and BOJ interest rate decision. Apple breaking now. Y'all smash that like. Yeah, smash that like button, you guys. Give it some love. Market's opening in 1 minute. Our liquidity maps front and center. We're golden. All right, market's open. Now it's gonna be a little chaotic today. I'm gonna make sure I get right out the door, and it's. Let's make sure those resilience numbers are clean. 40 and 3.5. Now they're negative. That makes a lot of sense. All right, so the market is gap down. Resilience numbers means the half gap is going to be resistance, and the half gap literally is going to be like somewhere inside of here, pretty far. All right, let's look at this. S&P at the open. Give it a minute to stabilize and develop. Obviously, negative resilience. Everything is gap down today, but it's interesting that the S&P is now positive. But I think that it's because it's not every stock that's going to be pulling back. Tech is an overshot here, which is what I was thinking was going to happen. But again, let's just double check as the stocks that were flat are now all selling off too to reflect. Now remember, the majority of stocks don't have a reason to gap down. Just the tech stocks do, right? And so the rest of the market should be stable and flat, just to kind of show you guys. I'm not expecting every stock to like have gap down like crazy. Like JP Morgan is like, you know, trading inside of a tight little range here. The majority of the stocks should be okay. So resilience should go positive, hopefully, because it's not every stock that should be going down, which is good. You know, QQQ today. See, like QQQ right at MHP. That's so good. Like, I love this. All right. See, this is what I'm saying. I don't think this is an event to crash a whole market. Yeah, good long side. Let me see if I can't find a good entry on this. There's still some volatility. I'd like to see a test. Look, now, look, the reses are still positive. Let's see if this is going to repair everything. I think this is an opportunity to long. So back up to there. I just need a place to get in on. Put in some. I know I missed like 100. Look at this. Market goes 150 points at the start. Going back up. And so we're good. With positive reses, the market's going to. Oh, yeah. Like I said, this might just go all the way back up today. All right. Let's find a good opportunity here. SPY's bringing hedge pressure. Let's let the first red candle I get. I'll build along, and let's actually trade a little more cautiously today. And I don't like trading in catalyst. Well, let's hit this with ES around that blue tap. 60-20. Oh, there's all kind of good love here. Keep an eye on it. This is good. This is good. Micros, guys, micros. That's it. Positive res. Dude, this could go all the way back at least to here. Now again, just micros. Nothing crazy. Just micros today. Just micros. I'll be playing with about, you know, the S&P. I'm looking for a hedge break right here. This is it. Fall about 4 points, emerge in the bad, about 60-20 on the support. Again, I don't normally trade when the catalyst is active, so I'm invoking my very small, what I call my very small setup. Let's watch. Nasdaq res is a little negative. S&P is positive. So S&P usually wins that fight. Like I said, I don't think that the Chinese tech crash is going to be something that's going to affect everybody. I don't think all the companies are going to be affected on this. Let's let it ride. Again, CAT is active. Tap at the few micros. Let's just measure this retrace here just so I can see where it is. I already retraced half. Yep, that is the halfway point there. Right exactly at that spot. This isn't a fib that I'm doing. This is just measuring. I just use the fib tool to measure a spot. All right. That's it. That's exactly on the level there. All right, so let's watch everything. S&P res. Like I said, I just put micros. Nothing crazy. Nothing crazy. It's good. Yeah, I don't think Chinese tech AI is going to be crashing like Costco and all these other, bigger stocks. Let's go ahead and just double check. Let's do the scanner. Let's pull up some liquidity maps. Let's do liquidity map current, greater than half gap. I think the market DD ratio like greater than half. Guys, this is so fucking bullish. Not even crazy. This is an overreaction. Now maybe today might not be the bull day, but I feel like today is going to go right back up. I do. Positive res on S&P, Nasdaq barely negative. There's still a couple micros at it. Again, this is dangerous. I wouldn't be touching this at all. The safe place is to be betting normally right about there. Liquidity maps on Q. Let me show you guys this really quick off to the side. You guys see on my chart here. Anything above here is orange to blue. So orange to blue is a good setup. If this res is less than 0, push back here. So this here to there is a great setup. Now again, it's a little volatile for my liking, right? So 2 micros. I'm gonna be playing with like a couple $100 up or down in loss. Okay, that's it. Yeah, we touched an open red line from January 15th. Yeah, I actually just deleted it this morning. Like it was like on point, dude. It was such a close. It was such an easy calculation we did back in the day. It was easy to see that one, and we just had it there sitting there. All right, so this is the potential setup that I like. Every single time trade goes from here to there. I got micros because this is 20 points of drawdown, even if it pulls back. And 20 points of drawdown isn't bad on one micro, okay? That's $5 a point. It's $200 a drawdown. So 2 micros is $200 if I draw all the way down to there. Every single time trade, here's the way that it works. Let me teach you guys something. Go all the way from there to there. Okay, ready? Here's how this works. On liquidity map, I trade from there to there. I X out. If it supports from here, I trade from here to there, and I blast it all the way through to there. Now, this is trade setup 1. If I get it, trade setup 2 is here to here to here with an interrupt. And I look at res at that spot. If it's greater than 0, I hold it all the way to there. So if there's a support at hedge pressure, which again, catalyst is active, so no big risk. This is just minis. I mean micros, nothing crazy. Okay. I think that volatility is kind of dying out. I'm holding up. I might actually throw one more micro at it. If it dips and comes back, I'm good. Every single time trade is from here to here. There's only strong pivots that I long on outside of DD bands. And because there's a cat active, I'm not eager to jump in and do something heavy. Okay. But you can't argue with the stocks. Like I said, the tech thing is not strong enough to crush the entire market. Resilience to tell you that in one gulp right here. Stock market's fine, guys. Stock market's totally fine. 183 stocks have gapped down and filled their gap and kept going. The little tech thing that we have is not crash in the market. All right. Every single time trade in place from here to here. Like I said, very small micros only. Micros only. For me today. Micros only, guys. Don't forget to enter the ETF contest. Remember, if the market's going to move 10 points for every contract mini, if the market moves 100 points for a micro, it's the same amount of P&L. So catalyst active, market's crazy. I do have some really strong pivots here. This is a single acting catalyst in one industry. This is not enough to crash the market. Not the stock market. Chinese DeepSeek AI is not going to be affecting Costco and McDonald's, Coca-Cola. You kidding? Who woke up and thought it's going to crash the whole market, guys? Look, my micros are paying out a little bit. I mean, not gonna lie, paying out just a little bit. VIX fading nicely, yeah. Apparently they lied about their GPU usage. Oh yeah. So micros, right? I don't need to put a lot of risk on the table. Every single time trade from bear zone to bull zone tap. Now catalyst is active, very risky. That's why I'm trading very small. And I never usually trade when a catalyst is active. However, this isn't a catalyst of the stock market. This is a catalyst of a couple of industries, one industry. So I'm deciding to take the risk here because why not? I'm going to risk losing $300 if I'm wrong. I'm going to make maybe $400 or $500 if I'm right off of micros. Bear zone top, bull zone bottom, every single time trade. I take this every single time. We covered this in the last class. If you guys haven't taken our classes, what is wrong with you? Every single time. Every single time means every single time. Even here, when it's like no trade, the only time I can choose to sit out, which I usually do, if this was a interest rate thing or a Fed thing or a CPI thing, that's market wide. But if it's an AI thing, I'm going to choose to take a couple micros and play that game just to try it. Resiliences are positive. That's incredible. DD ratio greater than half. That's incredible. S&P above MHP. That's incredible. With the greater bull market still in effect. So the idea is that here to there is a trade. One thing I'm afraid of is just the flush out there, which is what's good with the micros. But here to there is a trade. I always X out at bull zone. If it supports and if it bounces, I get right back in on bull zone bottom if this is greater than half. All my conditions are here. Again, this is a very risky play. That's why I'm in micros. Like, this is an opportunity of a lifetime right here. Market doesn't just hand you a fucking rally on a silver platter like this that often. Oh, wait. Hate when my string of my shorts goes all the way around. Where did it go? No. No, my short string pulled out of one side. Now again, if this all ends up, again, there's going to be some volatility, and I'm afraid that this might test really hard before it moves, but we'll see. Let's keep an eye out on this. You can eat at Outback Steakhouse tonight. You guys, I have to redeem myself. It's just the angle of the steak. Y'all trolled me so hard and said my steak was well done. But you have to see that these are slices and they're fanned like I have to save myself. The slices are fanned like this. And all you actually see is the top part of the steak. I got trolled so hard last night. That steak is medium rare, by the way. This is just, it's like, this is the crust and it's fanned slightly. And that steak is literally 2 inches tall. You can't see how tall that steak is. So there's all kind of delicious redness in here. I'm telling you, if I was to order a steak well done, I told you I'll have to kick my own ass. Look, that thing's bloody and red in the middle. Thank you very much. Y'all are a bunch of assholes. I love it. iDoc posted, it's funny because she posted on her, in her Discord and on her Instagram, and people were trolling her too. They were like, what the hell kind of Texans are you guys? And we were just like, and they were like, no, it's the angle. It's the angle. It was really funny. That steak was raw as fuck. It was super raw. All right, where is my... I hate when my Shorts. There it is. My short string pulls through. There we go. Ayo. We're back. You guys are so funny, though. All right, let's just wait. Everything's still looking okay, but let's keep an eye out on tech. Like I say, micros only. I'm in no hurry to jump in and like take huge risk on this. Let her move. Catalyst is active. 21,525 NASDAQ. S&P futures. I'm looking at SPY for a nice little setup here. Like I said, the market doesn't hand you a rally in a silver platter like this that often. It is a one single industry. Bank of Japan, yeah. But mostly Chinese ripoff, potential ripoff AI, or they built their own from scratch. We know the history in China. It's mostly ripping off stuff we do. We might have been training Chinese DeepSeek AI. Every single time we log into TikTok and do a CAPTCHA, we've probably been training an AI bot, been studying us for years and years and years. And now there's competitive AI similar to ChatGPT, but in China, the undercut of that was enough to crash tech stocks today. However, I don't see how that's going to affect Pepsi and Coca-Cola. You know, name your American non-tech companies. Pharmaceuticals, utilities, oil companies. I don't think they're all affected by this. Now, I don't think that the market's not overreacting to it, but clearly resilience doesn't lie. The majority of the American stock market, resilience is fine and dandy, which means the gap fill is what the stocks are doing. I'm not sitting here betting the farm on this, but it's highly possible that the S&P is trying to go higher because the majority of the stocks are. This was an undershoot in tech. Now, the market cap weighting will put weight on the market. A catalyst is active, but I usually make a judgment call when I talk about the type of catalyst. The catalyst that's active is a catalyst that's going to affect Nvidia and Meta. Even though it's the majority of the market cap, all these big tech companies, it's not the stock market. Resilience is market cap weighted as well, and it's showing the box that I circled in the right center of the screen is showing that the majority of the stocks are doing fine and filling their gap. They gapped down and they've already traded right back up to fill their gap. This is a tech thing, so I'm not going to call it a market catalyst. I'm calling it an opportunity. You like your bacon burnt like that? I'm telling you. That steak was pretty damn good, though. I'm not going to lie. We had a good time. Went to this. It was like this classic. It was literally called Drake's Hollywood. It was a classic Hollywood themed. I'm talking like classic Hollywood, like 60s, like Frank Sinatra. Like you'd imagine there'd be like a grand piano on the side and Frank Sinatra and a six-piece orchestra, you know, playing trumpets and trombones. And then like a woman in a red dress with like white gloves singing. It was like that kind of place. Very classy. There were lamps on every table, chandeliers above every table. Everything was like red and gold. Super cool place. It was like they had sushi, a mix of like steak, Italian, a little bit of everything in that place. Pretty damn good. It was really good. We were celebrating an iDoc work achievement. Finally. It's been a couple weeks you've been traveling. It's most likely propaganda and will affect the markets for a day or two. Jeff, I don't disagree with you, man. I think today it's an opportunity to trade a half gap at least. 601.5 on S&P or 601.4 for 598 is roughly a 30-point move. And I'm prepped to get some micros on it because this is how we do it here at Rock Studios. Don't forget to hit that like button. So many of you guys here, like I said, when Catalyst is active, I'm trading very small. I'm invoking the very small rule, which is 1 to 2 micros, which I rarely do unless I've convinced myself that this is a bogus catalyst. You see what I'm saying? Normally the rule is sit out always if the catalyst is market wide and you know that all stocks are selling off. I've got evidence that the majority of stocks aren't selling off, so I convinced myself to take a small trade. Like I said, there's always a little bit of flexibility. But whenever unsure, whenever risk is high, position size is low, and I'm trading micros. 50 bucks up, 100 bucks up. If this runs 30 points on 2, that ain't bad. That's going to be $300. I'm going to risk $300 up or down. Not a big deal. And then when we're above that pink line, I'm going to start hitting micros, hitting minis again. I'm trading by Tradeify accounts right now. I'm giving a Tradeify. This is day 3. I'm giving Tradeify straight to funded account. 5 150K, 150K, whatever their most expensive ones are. Straight to funded. Close out, made 81 bucks. That's what I'm doing. I'm pricing it in NQ. No, I'm trading on S&P. I want to trade the slower moving ship today. I don't want to go in there and trade anything too drastic. Every single time trade, bear zone to bull zone. I usually close out at bull zone. If it supports bull zone again, I trade it from here to here to here. I go straight through bear zone again. With res greater than 0, I can't imagine this not taking a stab at half gap. So we'll see. And it's interesting that Nasdaq is the one that's moving a little quicker. IWM completely filled its gap. So Russell's the big winner today. Good old Russell here. So I got trade number 1. And again, like I said, I'm only playing with a couple $100. Trade number 1 here. Trade number 2 here requires bull zone support. Ratio is good. Resilience is good. S&P is taking a little bit of a dive. So some of the stocks that they filled their gap are trying to sell. This is the first wave of testing. Keep your eyes peeled today. This is the key. We need this number and this number to stay positive. So far, so good. So the stocks have all filled their gaps and now selling a little bit. The question is now, do the stocks continue to go? The majority of the stocks that were bullish, are they continuing bullish? Think of like that the market didn't tank last night, right? And then think of every stock kind of gapped down a little bit and now filled its gap. Is this one of those gap and go scenarios where the stock market is still bullish? Or do stocks just fill their gaps and kind of like pile out from here? So that's what we're going to see today. Here we go. You know, with the micros and the up and down, we haven't really moved much. Maybe 10 points up or down in the S&P since we've opened. Nasdaq was kind of like the more, actually after that 20-point rip. Nasdaq's kind of the more brutal one. We went from 120 to like almost 320. So Nasdaq's gone. And so here we go. We're getting that wave up. Like I said, resilience is never wrong. Ooh, resilience is never wrong. When is my 20 days courses? Go back to course 1. Is it fine to hop in at any time? Toronto Trader, yes it is. Find a day to hop in at any time. Because we kind of, like, every class, we kind of bring up previous stuff. Every class covers one new topic. So, for the most part, there's nothing going to hurt you from jumping in late. The first 3 classes are the ones you always kind of should know as a foundation if you are jumping in late. And you can catch up on those videos at any time. The first 3 classes. Covers liquidity map, which is like the main tool we have in the platform. So we'll see if we can get that tap, the bull zone. 599 is another 10 points from here. Thanks, Matt. You had a blown account shorting. So res saves you all the time from the open. Yeah. Like there's absolutely no shorting outside of the DD bands on the bottom side. Or actually both sides, right? Below the screen line, absolutely no shorting, right? No shorting. No shorting below here. Sit out below here. Very small, 1 to 2 micros. That's it. See, a pro is going to tell you that when uncertainty is high or volatility is high, you're aiming to make a certain amount of money or percentage of your account every day. So if you understand the range is bigger, trade smaller. Simple as that. There's not a lot of complexity to this. Please analyze the monthly maps. Let's look at those monthly maps. Okay. Let's take a look. What on earth is going on here? So, yeah, we plunged into a bear zone, and it's interesting to see that there's a massive amount of liquidation built up, at least from Friday's close. That is a weird thought, but this does tell you that Wall Street knew something was going on over the weekend. People knew. They were already positioning. That's so crazy because the bull zone wasn't liquidating. The bear zone wasn't strengthening yesterday. So all through Friday, probably that end of the day selling on Friday were people that understood that they were going to be doing this on Monday. That explains the random sell-off we did have Friday. And now the bearish positioning is set up on monthly maps. That is very peculiar. So it looks like somebody knew they were going to be dumping their shit over the weekend. There's some leaked information or some kind of understanding there. Somebody had a heads up. And again, monthly maps are structured bearish as of Friday's close. How about that? There's your Wall Street for you. Isn't that crazy? Fake rips, fake dips, fake dollars, fake market. Isn't that crazy? Ian, there's a huge put flow at SPY on Friday. People knew that this risk was here. The monthly maps from Friday's close pick it up as well. Wall Street always seems to know these things. Isn't that crazy? Well, there you go. Well, What? It's like they always seem to know and you never seem to know. When you buy the 20-day course, does it unlock other Discord channels? It should. I'm not sure if it unlocks all the channels, but it unlocks some of them related to the courses. I don't know if it unlocks the chat channel anymore because I forgot how I structured it. I don't think it does. Someone called out DeepSeek on Thursday. Austin, no way. They did. What? Let's get it. Come on. Why is the market trying to sell? What's the rest of the stocks doing? PepsiCo, a big part of the NASDAQ. Let's see what the rest of the stocks are doing. Let's look at some banking stuff. Hold on. Let's get a... Healthcare is doing great. Real estate doing good. Consumer staples doing good. Everything else doing bad. Hold on one second. I'm going to refresh my... Froze my stuff here. Don't go anywhere. All right, let me clean this up. Keep an eye on resilience. Some of the stocks are trying to pull back. The S&P is the one that's actually more affected by this than NASDAQ. So it looks like the NASDAQ opportunity has gotten a lot of people interested in NASDAQ, but the S&P is starting to respond. Watch out for this resilience number. The S&P is testing that little gap fill there. Technology's down almost 4% today. Utilities are down 2.5%. Consumer discretionary, communication, everything else is relatively flat today. Flat-ish, like not even a big deal. So tech, utilities, those are the big ones. Everything else relatively normal. CM, you got 2% on staples, 1% on real estate, almost 2% on healthcare. Market's doing good. And resilience is going to watch that, and hopefully, we're good. Like I said, the market rarely hands you a rally on a silver platter like this. DeepSeek has errors. It can't do a think script without errors. Oh. Yeah, I would say that at least right now, I don't think this is going to be enough to crash the whole stock market. This is an opportunity. Rare that it is that the market crashes on something so basic. The rest of the stocks are doing fine. So I bend my catalyst trading rules. I'm going to get another 30-point rip in the S&P in the next, 15 minutes. Let's take it. I hope to make $500 on these tiny little micros. And we're breaking the highs. Who's right? Who's getting it? Home sales are coming up. And that's interesting to note because today, I think that is actually one of the green sectors right now. So be very careful that the home sales don't blast the market around. Come on, keep going. Daddy needs $100 to pay for his burnt steak. Let's go. Actually, it was a little more than that. Take a look at the COT. You're not impressed with it, even though the one thing it is free. All right. Check the community of traders. We had ourselves a read on that last week. Or I guess our class on that last week. Let's get a read on it today. As you guys see, the last tick on this, you have bull liquidating, bear liquidating. This is actually when they're both sloping down, which you see that's actually really strong and bearish, at least for positional sizing, right? So even on Friday, you can see that tick on Friday. Again, this information and people's plan on doing this today, they were planning and building on Thursday and Friday. Put flow was going up on Thursday. Friday, we had a magic end of the day sell-off for some odd reason. Now, commitment traders, which is reflecting that data point from the, this is actually the 20th. So this is actually a week old. So this isn't showing yesterday's or the last print. So I don't know. But in general, that's just showing that selling pressure there. So if we get 2 or 3 ticks of this going down, you know, this is going to be obviously more selling pressure or topping pattern. But I think that we'll probably see this tick up if the monthly maps are just like this is just a one-day bear event. You guys don't forget to enter the Elite Trader Funding drawing for today. Go to the Discord. What is this? Fast track 100K. I've been bouncing around between $100 and whatever today. So again, Cal's is active. Be very careful. Micros only. Not really gonna put too much on the table. But man, it is rare that the market hands you a rally like this on a silver platter. I've been saying that all morning. So rare. So rare. It's free money today. I'm not even gonna lie. You love me. What's up, Tav? Come on, let's go. Let's get a little bit of bump. A little bit of bump on this. Ooh, 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 ooh. So close. Come on. Come on. Resilience is now 20 and 27 across the board. This is good. This is really good. I would be dumbfounded if this continued to sell. I would literally have no clue what to say if it continued to sell. Go back to hedge pressure? Maybe, but I don't know. Volatility is collapsing. Even VIX. VIX is not in a bullish liquidity map anymore. VIX just completely fell below HP. So there's no bullish pressure on VIX. I think the market's still trying to figure out what's going on, but I think that everybody that wanted to liquidated their shit on Friday and Thursday. People prepped on Thursday to haul off a margin call on this Chinese DeepSeek. That's exactly what it was. We saw the flow on Friday. We saw the flow on Thursday. We saw the mysterious Friday end of the day sell-off. Kind of came out of nowhere. This is a really, really weird. I mean, I was peeking at it. And VIX didn't even pick it up. That's the interesting thing. Like I said, I don't think the market's gonna crash. But yeah, like at the end of the day, like the market just sold pretty quickly and then continued its move. It's like people were already liquidating on Friday for this. You can see it's just going straight down. So somebody took wind of this at the start of the day. And even yesterday, start of the day, it was selling, which means Thursday's flow, we saw puts kind of sneaking in, right? put flow was going up on Thursday, and people were liquidating on Thursday little by little by little by little because they knew this was going to happen. You got to love it. Super nice. VIX ticking up just a little bit. Like I said, micros in the S&P, nothing crazy. Catalyst is active, so, you know, it's dangerous to trade down in here. Extremely dangerous below this pink line. So micros only. I'm gonna be risking $200 or $300 either way. Catalyst. This is okay. Ooh. Like I said, keep the risk small. Every single time trade. Just gotta wait on. Let's see if we get that hedge pusher tap. Res is good. Res is greater than 0. I would be dumbfounded if this sold off from here. Let's see if we get that little hedge pressure tap there. That'd be nice to see. Is that first test? We do have 9 o'clock, so now the market's just now. It's been open for like 30 minutes. What an exciting 30 minutes, you know. Resilience is still good. Market's still decent. Not worried about this at all. Market's looking solid, I think. This is a rare opportunity to see the market fall like this and give me a pretty solid, nice, decent bull run on this. I mean, it's kind of hard to think about how far it could go if it does go. Like I said, I'm not, you know, we're gonna, like, if it falls here and reclaims hedge pressure one more time, that's it. So watch for the volatility to collapse out. UVXY at 20.5 is a key level. Make sure we don't break through that. That's what I'm thinking. 2 micros to ride if it runs. Res is good. Everything's good. Market's a little irrational, so just be careful today. Just be careful. There's that halfway point here. Right there at hedge. Okay. Gonna see where that halfway spot is. This is like such a rare, like, I like that last night I sat out and this morning I woke up to like a golden opportunity. Although I'm not, like, you know, I have to maintain consistency in these funded accounts, so I can't just go out there and go for a blowout and try to make like 5 or 10 grand each account. Consistency is part of the trade plan with the Tradeify ETF. All of them have consistency rules, so I have to throttle my position size lower to meet those consistency rules, right? Like I said, resilience is never wrong. Nasdaq's at 40. Hell, 30, 40, it's moving. Resilience doesn't lie. Tell me the rest of the market's fine. Home sales, the impact. Now, real estate is one of the 3 sectors that are doing pretty well. I would say that that's extremely important, but let's talk about you want to talk about the fundamentals? Let's talk about it really quick. So today, right? December building permits, the month-over-month change, and the new home sales, and the new home sales for December month-over-month change as well. Okay, so let's start at the beginning. New home sales, right? Month-over-month growth is greater than 0. Now you see new home sales are kind of like noisy, right? It's very weird and hit or miss. There's no trend here and no seasonality here. A lot of people like to talk about new build seasonality. It's like year over year, it's so different. So you know how the changes doesn't seem to be like any solid burp of like new home buildings instead of like small bursts of like months at a time. So companies tend to like strategically operate relative to like their own. It's just noise, right? So this particular month was an uptick. Now let's talk about new home sales in general. New home sales on average, right, have been up since the financial crisis in 2010 and have been up even despite the crap in COVID. We had a big bump in new home sales right during 2020 when everybody was trying to get a house at the cheap interest rate. That's what made new home sales go up. And there's a building craze. But now that that's over, we're kind of back to normal. This is interesting because like this is average highs for the market. So average demand going all the way back to the 70s. You know, 600,000 to 800,000 is pretty normal as far as a peak for new home sales. So even at the interest rates being between 5 and 7% mortgage rate, people still want to buy houses. Now, the inflation is coming down. It's making it more affordable, and banks are trying to lower their lending standards. In general, this is good news for the housing market. This isn't bad at all. The housing market's been trucking along since January. Even though the rates have been going up, the demand has been fixed. So when demand for houses go up, rates go up even higher. So the demand is not coming down. Rates are going to stay high, and with less lending standards, people are going to buy even more houses. This is going to trend up. So that's good. That's bullish for the economy. That's really good for the housing market, at least. Building permits has to do with getting a permit to build. It's a hint of towards the future. And as you see, the building permits are always up and down. It's really hard to say that there's any kind of seasonality or trending inside of here. These month-over-month changes are relatively random. So I kind of don't put too much faith in them because it's really hard to see a trend. Sometimes you'll see new home sales extremely high, like month-over-month percentage is really high during times like COVID and whatever. But in general, those are the growth rates. Not going to give you a lot of information, just noise. So building permits, nice and steady. New home sales, nice and steady. It's good. It's good news. Not bad. And I know I'm a home buyer in this time because I think interest rates are going to keep going up. So to celebrate our podcast with Tradeify that we had on Friday, I told Brett I would do some Tradeify straight to funded accounts. I've got 5 150K straight to funded Tradeify accounts. I'm on day 3 right now, 10 days to a payout. Nvidia is shitting the bed. All indices are going down. Let's check on Nvidia today. Like I said, we're not picking up a lot of momentum, but the stocks are looking pretty okay. Right, Nvidia pulling back today, causing a little bit of nastiness in the market. That would be the one thing that has me concerned. Nvidia being so heavily weighted. If Nvidia starts to collapse today, could it yank the rest of the market down, despite the majority of the market cap doing great. Even with Nvidia where it is, there's enough stocks up here keeping us going. So, Nvidia. The reason the S&P doesn't have the momentum to quickly move is because Nvidia lacked that momentum. Probably about right about here is when Nvidia started turning around. So we'll see. My platform freeze up? What the heck? Oh, I disconnected. Hold on 1 second. refresh here. Let me reload my platform. Hold on. So when catalyst is active, markets are random and loses a lot of structure. So right now we're in that random boat. I think we're good. No, I mean, I think we're good. Resilience. Now, again, resilience could be a lagging indicator when markets are irrational, but still. Not afraid of this. Kulo is selling Nvidia calls against your shares. Selling covered calls. What's your strike? So the way, if you guys don't understand options, what Kulu is telling you is he's hedging his protection of downside by collecting premium on any decay of those options based on not striking the money. So basically when you sell calls way up above current price, you're betting that the market doesn't rally back up as a hedge. But if it rallies back up, you're great because you got the stock in your hand already. So the idea is he paying a little bit of insurance to short some calls against the shares he has. If somebody buys the calls from him, which they did, and exercises, he owns the shares already to sell to them, and he can assign the position that way. So that is the that's the thing he's doing. So anytime you're holding, and the reason you would do a trade like that is if you're long some shares, you don't want to let them go. If the market continues to fall, you're just going to collect insurance on other people that are buying those calls, usually that are shorting the market and buying calls to hedge. So the calls are their insurance. He's become an insurance salesman, and it's collateral for the insurance that he's sold because he's on the other side of the trade of the shares that he owns. So the neat thing about that kind of trade is that when there's volatility like this, he can just basically bet that he could sell calls anywhere. Like we're not going to rally to X. Like if I were to sell calls, I could sell calls way up in here for you know, like the rarity of us breaking through here is rare. And if the market just goes straight there today, you've neutralized your trade because you're actually long. You're long the shares anyway. So it's not a bad way to hedge if you think the market isn't going to rally, but you don't want to let go of the shares you have. Collect some money and not have margin calls as your stocks continue to fall. And then any premium he does collect, he's probably going to buy the dip. Am I wrong, Kulu? If you come out profitable, if it isn't just a hedge, you come out with a little money, then you're probably going to take that money and buy some more stock, right? A lot of people do that. There you go. So he's like, basically, as long as it's falling, I'm going to sell calls. And if it rallies, that's what he wanted to happen to begin with. Here's that hedge pressure test. You've been waiting for that. Let's see what happens. Going to overshoot it just a little bit. He said that's what micros are for. Zoom in just a teeny tad right here. Nvidia is probably taking. That's exactly what's happening. So looking pretty good. I'm not adding right here. I'm just waiting. Gold bull zone bottom. Ooh, very nice. Guys, don't forget to enter the contest at ETF. We have codes for Elite Trader Funding, Apex, and Tradeify. I want you guys, anytime you guys trader funding programs, use our code. Use our link. Get you the best discount they have. You currently get 30% off of a straight to funded with Tradeify as well. It's what's cool about that is you just basically you just pay a little bit more and go straight to funded. You don't even have to do an eval. They're end of the day drawdown accounts. So it's not even a trailing drawdown. That's what I like. Does that mean that those shares can be assigned for the low price of premium collected? What I was saying was that if he sells the calls and the calls go in the money, the person that bought the calls from him could exercise, and then therefore his shares go to them. But if that's the case, then he just sold the shares for profit. He had the cash to buy the shares to begin with. He can immediately buy them right back. I don't have a discount with Tick Trader. I have no idea who that is. Probably should find out. So the idea is that if the wheel strategy is a great income generator. The idea is that if you put some cash into a bunch of stocks and the market's falling, you could get a margin call, which means you have to sell your stock. So what people do is they have a little bit extra money is they'll buy calls because they're covered. Sell calls against their position. Because if the market's crashing, he's just going to collect money on the calls that were sold. Which is good. Look at Nvidia just falling straight down. There's that halfway point on the S&P. Do I want to add one more micro? Should we be a baller here? UVXY is breaking hedge pressure. Just be careful on this. 2050. So VIX's volatility is increasing. There could be a little quick dive really quick, which is why I'm glad I'm inside of the range of having small position. No pivots on Nvidia. There's nothing in the way. That's kind of the sad part. Giveaway in 1 hour. For giveaway. 1 hour, guys. Don't forget, hit that thumbs up button on the stream. You guys got to give us some love. Bottom right. Click that like button. I just got 2 micros. Like I said, $100. Up or down. I want to make it all the way to bull zone. That's what I want to do. Let me actually draw a little bigger here. So I take this trade every single time. I X out there. If we support there, that's number 1. I long from here. We have this rule called the bear zone, bull zone sandwich. You long all the way through bear zone to the next bull zone. That's a rule. Trade number 2. If we support 599, the momentum's going to pick up to go all the way back to 604. It's 50 points in the S&P. 50 points. If we break 599, we're going back to 604. Easy peasy. Any momentum at 599, we're going right back up to DD bands. Did China acquire black market chips? Oh, I don't know. What's up? Hey, what's up, guys? Wow, a 1-to-3 like ratio. I'm going to tell you guys. Here we go. What I'm going to do is I'm going to go downstairs and have me some breakfast. When I come back, I want to see 200 likes on the stream. If you haven't clicked the button, feel free to click that button. I'll be right back. Oh, was that a statement? There we go. There we go. There we go. Let's get those numbers up. 5, 4, 3, 2, 1. Okay. Contest is in the Discord. The bot is posting. There's a link. You have to go here, go to our Discord, enter it. You get a message. Slacks will send you a message if you have any questions about it. I'll probably tell you about our 20 days masterclass. It's 20 days for $20 to learn everything it is we do trading. All the stuff you see me do here, I'll teach you in 20 days for $20. That's it. We don't have any $500 course. Stop going out there and wasting all your money on stuff. Make it $1 so you take it seriously. That's it. We'd love for you guys to check out our courses. We're probably one of the most popular things in Wall Street right now as far as trading courses go. Everyone is like raving about what we taught them this last go around, which makes me happy because we're really substantial as far as our risk management goes. You see me here knowing the market's doing what it's going to do. Let me show you my moves so far. This is part of our classes. Ready? Anytime you break outside of this green line in the overnight, automatic sit out, strong long pivots only, but there weren't any, so it's an automatic sit out, and I avoided a market crash. Cha-ching, money in my pocket. Wake up today, catalyst is active below this purple line. I don't trade at all usually, but if I convince myself that this is a bogus catalyst because it's just affecting like a couple of stocks that are high market cap and the rest of the stocks look good, I can invoke 2 trade despite my rule to auto sit out. And then instead of trading 1 to 2 minis, I'm trading 1 to 2 micros. And that's all you see right here. And the reason I'm not selling, even though Nvidia is tanking, because fuck Nvidia. The rest of the stocks are looking good. Rocket Scooter, that's funny. So the idea is all of these choices are part of the program. This is all textbook I'm doing right now, nothing off the cuff. The trading very small and trading when there's a catalyst is something we don't teach. We tell you not to do anything here. But like, this is a goal and opportunity for me to see. And again, because the risk is high, I'm trading very small. I'm going to make $300 to $400 if I'm right. I'm going to lose $300 if I'm wrong. Don't care. But if 599 hits on S&P, we got 50 points of rally, ladies and gentlemen, to fill the gap. This is going to be fantastic. As you see, my confidence is very high. It was enough to take my sit out trade and at least put some risk on the table. And we'll see how well it goes. Do you get accounts after 20 days are over? Access. So after the 20 days are over, you can get access. If you switch to buy the platform during your 20 days, we'll refund you your 20 days because it comes with the platform also comes with the classes for free. So if you take a couple classes, you're like, oh, I love it. Let me do the platform. It's 50% off the first month. We'll give you your $20 back if you upgrade. Like within a couple days. If you upgrade at the end of the month, we won't refund you, obviously, because of the second month. But like if you're in like a week and you're like, oh, I love this. This is fantastic. Let me upgrade. We usually just refund you the money because it comes with it. You know what I mean? Where's the trade? Oh, right here. So what most people do is take the classes and then they want to get the platform. We usually hook you up. Yeah. So 20 days, $20. I'm going to let you guys know everything you see me doing here is all textbook. There's nothing off the cuff here. We have about 10,000 user accounts for the platform. We have about 6,000 active people in our Discord. We're pretty huge. Very active. Lots of good information. That's not a lot of like kids and junk and like, you know, YOLO gambling. There's a very professional attitude on Discord. Probably the one futures Discord that is very professional. Not a lot of memes, not a lot of joke. There's a lot of people that are very serious just like I am, which is great. You get a lot of good information. Let me show you guys. Here's what the courses are. You go to Rocket Place, Matt. Hold on, let me give you the link here. Go here. Click that. You guys can read the reviews. Their actual customers left reviews. 69 reviews. Giggity. I guess so far. You can read what people have to say. It's by far, and these are the customer, and this is the product they purchased. So it's not just like you telling your friends, "Hey, go leave a good review." People leave reviews on their own. I just say leave any review. The true advantage over the market. People are actually writing some really nice stuff, and these are people that you see in chat. Rich, Espawn, Ice Wild, MC. These are all people in chat. You can see all these people here. Sook. Sook Darshan, Jeffers. These are all our people. So again, like I said, there's, you know, a lot of really good, you know, people are saying like, this is the one thing that stands out like no other. There's a whole, like we have an actual regimented strategy approach. It's all risk management, position management. I mean, if you guys don't know who I am, you know, I compete globally in futures trading contests. The last one I competed in, I got first place. Again, my results don't imply your results, but I have a very regimented approach to the market. Every choice I make from 1 to 2 micros to where I approach, to where I take the trade, to where I'm getting in, where I'm getting out, all this stuff we teach you is all textbook today. So what's up? What's up, buddy? Espawn. Discord is solid, slow pace, and quality chat. Not one of those Discords where you can't keep up the chat, memes, and small talk. It is. It's like very much the Discord is like an information hub. People post when it's important. They're not just like filling up your box with chatter, you know, like. What are the levels from Nvidia? The unfortunate part is Nvidia's don't have any supports from here. Nvidia is actually, let me close all this out. Nvidia is in what we call a bear setup. Below MHP, Nvidia has resistance off of the orange. So the best I can hope for Nvidia today is a move to there to support the rest of the market. If Nvidia breaks here, then it goes back to there. This is the liquidity map there. So all pressure from 130 is pushing Nvidia down. Like if I was long Nvidia, I'd be selling covered calls at 130. That's how that works. Because I would be betting that 130 wouldn't breach. And if 130 breaches and we rally back up, then good God, I get like basically the rally I wanted on Nvidia to begin with. All right, there's the push. There's the push. There's the first trade. Let's take the profit there. That's it. Ladies and gentlemen, the best to ever stream it. The best to ever stream it. Now we pull back $5.99 on the tap. I drew this at 9:30 this morning. Best to ever stream it. So, you know, I'm just saying, here to there. Hey, guys, how often do I take this trade? How often do I take this trade? Question. How often do I take this trade? This one right here. Every. So, Steve. Every so often. Yes, so baby. Every single time. This trade, what's the probability of this setup? Under all conditions. 90%. This is a 90% setup. This is one of the best. This is my favorite setup. Under all conditions. Now, when my fear is high or the rationale is that the risk is high, I just traded micros. It's only like $200. But you see where I'm going. Now, that's gone off the table. So we're going to remove this. Trade number 2 is even better and bigger if we get support at $5.99 right here. Again, I'm going to let it move and return. Volatility is still in a place where it's not just going to get a nice clean move. I need to let it go and return, which is like I drew right here. If we go and support here, this is about 50 points of move now, right to there. This is why the courses, I smile when I say this. The only thing that has ever worked for them personally, been using the platform years, and this is the one stands out like no other. Strongest fundamentals and the indicators in the space, no doubt. Great people, great platform. He's a game changer for selling zero-day options. Witchy over here. That's pretty cool. I didn't know that. Amazing market insight. Amazing teacher. High-level instruction. Good. I draw my trade plans on the chart. I have probabilities to go with all my setups. Here to there is a bigger run on this setup. I don't hate it. I need a lot of confidence on it to jump in on. Remember, Catalyst is still active, so I'm not in there going to jump in and long the farm. But this, I'm going to let it trickle along, and any red candle that I get that comes right back to here, as I've drawn, I'm in. Every single trade time is honestly about 70% with the 50%, 50 point, 12 point ES stop loss, and you use it. Very good. It's 90% under the conditions of the DD ratio is greater than half. You have no irrational signals here. And the greater market's all bullish. So let me preempt this. The 90% was measured when the greater market signals are bullish, and the 3 signals are DD greater than half. That's the main throttle for that trade working. Number 2, SPY above MHP. Both are true today. Number 3, monthly maps bullish, and today they're bearish. So we've got 2 bullish, 1 bearish. That's kind of bad. We have hedge breaks and DD band breaks to the downside. That's bad. But everything else is still good. So as Rich has said, the stats are roughly 60 to 70% on this trade. I clock in close to 70% as well under all conditions, like bad conditions. So it's roughly under all conditions 60 to 70%, which means in the worst case market, I still want to take it every single time. But because we're down in the 60 to 70 from 90%, what did I teach you guys? It's 90% under ideal conditions. It's not ideal conditions. So what did I do to account for this? Let's see what y'all learned from me. Did I do something special to account for that lowering probability? I resized my bet. Anytime my confidence is smaller or lower, I bet smaller to go with it. That's it. I just sized down and bet smaller. You guys are so good at this. So the idea is 90% I'll hit it hard. As Rich has said, he gets about 70. I get about 70% on that one too under these dog shit conditions like we have today. Right? Now today, I'm not going to chase the long on bull zone break. The market's volatile enough right now that I'm going to trust that I'm going to go ahead and get some move here. Let's let it play first. And let me actually make this a little more prominent so it's easy to understand my rationale here. Volatility means we can overshoot. And if we're back right here, I'm going to take the long again. I'm going to give it some time to play out. Yeah, bet smaller, right? So, I mean, it's not like I'm going in there betting the farm. Although, anytime the market rallies like off of a big dip like this, you guys know, I always inch my way up. I don't just plant contracts and take it all the way up. I got to have the confidence. And I'm not going to take these 2 minutes of candle right here to give me confidence in that either. I'm going to let it move up a little bit like I'm missing out. I'm going to let it try to flush one more time. And then when it recovers, I'm going to long here only on these conditions here. And again, if I miss out on this 10 points, I'm totally fine as well, because there's a combination trade going on here, which is why that green arrow goes so far up. And if you guys can't tell, it's two pieces of a trade. And this again is my every single time trade here to here is the same as that trade from here to here. There's a 40-point gimme from the fucking market today. Another EST trade. Every single time, things are looking pretty solid there, EST. Now, the only question is, do I want to chase it here to go from there? So normally, bull zone support, DD greater than half is a good setup. I'm going to let the volatility and the craziness of the market allow this to overshoot. As I'm drawing right here, this is kind of what it's doing. Not confident, not good enough yet for me to take it. Trust me when I say I'm not going to miss out on the 40 points that the market will literally give me. With very little ease or thought. I'm going to set a long here. I'm going to set a stop here. And I'm going to go 4-1 on that trade with 3 micros because we'll likely be out of the catalyst zone at that point. Maybe not. Let's double check. Yes. So do I want to take the risk to get in 10 points early, or do I want the confidence? And I think because the catalyst is active, I'm going to go ahead and avoid this trade. I'm going to make the decision now because CAT is active and I've talked myself out of this one. Let me let it play around, but I will definitely take the long right here at 600. That's a nice even spot for the S&P as well. 525 CAC active line. NASDAQ, S&P will be right about 60-61, which is great. That's about 20 points higher, which is up here. So the classes are like this. I teach you guys a regimented trading strategy. Application, position size, market avoidance strategies, all part of it. I avoided the market down in here, watched it fall, woke up here, got all the signs the market was decent, took a long right here, took a scalp right there. And again, micros because the risk is high and my alerts are showing me that it's bad. Matt is goated, no fluff, just real stuff. Yeah. So the classes are $1 a class because I'm not trying to make money selling classes. It's $1 so we don't get a bunch of jokers in there and keeps the Discord nice and clean of people that are serious. $20 is the cost of a book. That was my rationale. 20 days of your life for $20. You will walk away with position management and market avoidance strategies. They are live, so you can do Q&A with me after the fact from 3:30 Eastern until roughly 5 at the latest, about an hour to hour and a half, including Q&A session. But they're also recorded and posted every night, and they come with handouts, so you guys get all the things in like little cheat sheets. So in the Discord, this is how you do it. This is the current boot camp that we're doing. We go from classes 1 to 20 and we start over. The first of the 20 classes is something called the edge and probabilities. The edge and probabilities teaches you exactly what you're doing wrong in trading. You don't have an edge. And we show you a couple of really cool ways to have an edge. And then these are the courses. These are the handouts that go with it. This is the resilience, the class we're talking about now. Resilience, when resilience is bullish, you have the desire for the S&P and the NASDAQ to go and fill their gaps this way. That's the whole motivation for my trade today, was that resilience number. Right here, these things have been strong and positive despite a really large gap down. So this S&P is trying to fill its gap. NASDAQ is trying to fill its gap. It's going to have a hard time because the market cap is yanking it down, but there is upward momentum through that box as indicated by this indicator. It's a really neat tool. Like I said, the classes are $1 a day. We get to 20, you start over, you do them again, you do them again, you do them again. And it's the same material over and over, and it's repetitive so that it catches on. You guys, here's the link. I tell you, and if you don't like the classes within 3 days, we do full refund. And I'm telling you, we don't ask for a refund. I mean, because there's a difference between learning charting, which is what most of you have learned, and learning trading. I don't believe there's a single trading educator out there that I even know. There's a bunch of chart reading educators. There's a bunch of pattern reading educators. They're teaching you charting, and that's not trading. Unfortunately, you might be the best technical analysis chartist in the world. You're gonna make a damn amount of money trading. I made a tweet this weekend that kind of like hinted towards the realities of that. Like charting, to assume that you're going to guess the market is all charting is doing. You pick the right entry and right exit. That's all charting is going to tell you. Here's where I get in and here's where I maybe get out. First of all, technical analysis doesn't even tell you where to get out. You might have picked some levels like gap fills or when averages cross over as an exit signal or whatever, but you don't really, like in charting techniques, there's not really a good way to pick good exit targets. Entry targets are typically what you're taught. So you're reading a chart, and all you're ever really doing, the best you've ever done, all of you, the best you've ever done, is roughly got good entry, right? And maybe, like, you get really good entries. TA, yeah, let's get some good entries. This is momentum, let's get in. Exits, yeah, kind of like mid, right? Not really that good. Like my exit. Literally, I drew a line from here, and I had an X sitting right there, and I had my exit plan hour in advance. Okay. But what is missing is risk management, which is a whole strategy of a bunch of different things. This is stop loss management, where to put a stop, how far away. This is DCA, dollar cost averaging. Do I add to my position? My confidence is high. This is position sizing. And this actually is where you don't make money in this part right here. And then market avoidance. These are the things that you need. So this is what you're missing, is a rule to sit out, a rule to scale down, a rule to add your position, and a rule on where to put your stop. This is the difference between you and me. And this is the difference between winning and losing. Anybody can put anything in here. In our courses, in our first course, we actually give you guys a strategy that says if you randomly long the market and all you do is change your position size, randomly longing the market makes more money than you do day trading. It's incredible how strong, powerful that strategy is. You don't even need an entry and exit mechanism to make money in the stock market. You just need to bet correctly. You can randomly long the market with a sizable stop and set your target loss per month, and ultimately the bull market will carry you to victory. And we prove that. Our first class drops the mic on you that way and tells you you're doing all this extra work just to lose money because you learned a lot of charting. If nobody taught you position size mechanics, why did I do 2 micros instead of 2 minis? Why did I exit at 5.99 instead of add? Why am I waiting for additional volatility to overshoot and confirm? Why am I waiting for my gimme trade at 600? Right? These are things that are just part of a greater strategy. Why at 600 am I going to hit this with a little heavier, maybe 4 micros instead of 2, right? So the idea is to like reformulate your brain into thinking about markets differently. Now, the tweet I made this weekend was basically saying that when you're using charting, you're just looking to get a royal flush in poker. Yes, the royal flush will win the hand, okay? But you could have bet $5 and you didn't make anything off of that amazing hand. You can't rely on the hand to give you the income. The reason there are certain poker players always in the top 100 of the pro circle is that they're betting correctly. They know when to fold, when to hold, when to double. The idea is that you are betting incorrectly, and that's why you're not making money. You might feel like you make a good trade here or there, and then when you make a bad trade, you lose it all. It's because your risk management is absolute garbage. This is a 20-day boot camp on risk position management. Plus, we give you the best, I think we give you the best entry and exit tools you can ever have as well. That beats TA into a pulp. But I digress. You know, the idea is that risk management is very important. Position sizing, confidence meter. If confidence is low, bet small. Confidence big, bet big. That's it. So I'm avoiding this $5.99 right here. Oh, thanks, bud. All right, here we go. JK is donating. Holy shit. All right, let's do a drawing. He's donating a class to you guys. Look at that. Or donating some money to the community. I think he wants to donate here. So I'll give out a free class because JK is donating some money. So, all right, who here wants a free class? Just $5. I'll give out one free $20 to somebody. We'll do that as well. He put in 5, I'll put in 15. Let's do it. Like I said, we want people to be able to manage. Wait a minute, I thought I bought this. Hold on. I swear, I know I bought this. Oh. Just go to the drawing. All right. Here's the rule. Subs can enter twice. If you're subscribed to the channel, you see that JK has the little green. If you have the green subscription to the channel, you can enter twice. What we're going to do is when everybody type in the words free class if you want a free class, but only if you're not already in it or not already a member. Don't enter if you're a member. Listen to the rules. Don't enter if you're a member. Type in free class, one word. Sorry, one word. My bad, one word. Just one word. There we go. Let's get it going. All right, you guys are entering. Let's go. I'll do a little drawing for the class, and you guys can have a free entry on that. What we hope in the classes is to dispel a lot of the nonsense and garbage you guys have bought or learned from. It's been helpful to your journey, yes, but there's a lot of people out there who just teach charting and they tell you they're teaching trading. Teaching charting is just teaching you the cards. Charting is like saying, here's a royal flush, it beats a full house. Here's a full house, it beats a pair. That's all charting is. The part that you're missing is how to bet with whatever the hand is that's dealt to you. Have any of you guys ever taken a class on betting and trading? Or have you just taken a class on charting where people are showing you charts and patterns and stuff? That's what I'm asking, right? There's never been a masterclass taught to you on betting principles, and betting principles are all that matter. In the first class we have, it teaches you that betting is all that matters, because I wrote a computer program that actually randomly longed the stock market at a random time every day. And all it did was change the position size to maintain half of your account at the end of the month. And even if you lost 20 straight days in a row, ultimately, if you had half of your account left at the end of the month, you made money over 10 years and 50 years and 100 years trading just by randomly longing the market. It's insane. It's insane how a trading strategy of where you enter the market doesn't even matter. Longing is statistically in your favor. So randomly longing over time, the law of large numbers brings the statistics into your favor. As long as you survive long enough, which is the key to betting correctly, you make money. Your 401k uses the same strategy by buying the dip and buying the dip and buying the dip, and ultimately it goes up. So the idea is that is a proven strategy because all y'all make money with that strategy. Your retirement account for the last, I don't know how many decades, is always bigger than where you started. How much you put in, there's always more at the end of the day. Unless you're just unlucky and you cash out during a market collapse. For the most part, they're just buying stock as it dips. And so there's some truth to the metric of, you know, the degree of inflation that builds itself in the stock market. And the fact that as long as people are employed, the stock market always goes up because there's 401k money pushing it higher. There's always demand for stocks. Demand for stocks is proportional to the employment in this country or globally. So the idea is the stock market always goes up. We know that. So why are you spending so much time fighting the market and your account's going down? What are you doing wrong? You're shorting too much. You're not avoiding the market when you need to, and you're betting improperly. You're betting shit when you have a good hand. You have a royal flush and you put $5 on the table. Or you're betting it all when you got a pair of sixes. I mean, it's like your betting is all out of whack, and that's what you're not doing right. And that's what makes me win contests. Not because I'm the best trader in the world, but I'm very good at betting. Very good at risk management. Like, that's the only thing that puts me at the top when I win stuff. It's risk management. It's knowing when to get out of the way. Do you see what I drew on the screen? You see what I drew on the screen? You see what I drew on the screen 20 minutes ago? Do you see what I did? And do you see that it's happening? Every single trade, every single time trade here to here, close out, I'm letting it jolt around and overshoot and reclaim, and then I'm back in. And then I'm taking the gimme at 600, right? The idea is that I have a plan and I'm 5 steps ahead and I know how much I'm betting in my plan every time. So the difference between me and you is the amount I bet and where I put my stops. I am so regimented on that. If you didn't have a style, to do that, when you're trading, you're going to lose to people that do that. Because there is so much thought I put into this. Now, again, the classes are easier than this, but there's so much thought I'm putting into this. Why am I letting it bounce around? Because the volatility is high. There's a catalyst active. I'm not going to trust a nice, clean rally. I'm going to trust that volatility is present. I'm going to let it dive around a little bit and watch that volatility decay before I take an entry. Right here, the volatility is clean in decay. The liquidity map shows there is no bullish pressure below this blue line for VIX, so I'm good and clean on volatility. Right? I need to use my tablet. I know I need to turn that back on. I know my drawings are terrible. Okay. All right, free class. Ready? Rich says you look when the deck is hot and look for a blackjack. That's, yep, exactly right. That's charting. You're looking for a blackjack. You're looking for everything to line up and you're swinging for the fences. Don't be like Stevie Nicks. Break that chain. Change how you see the markets. All right, free class. You guys ready for the drawing? All right. My stylist is over there crying. It's over there with that burnt steak, apparently, right? Everything's just going to shit today. All right, let's do the drawing. Welcoming someone to the family today. Austin Helton. Austin Helton. All right, you have to write something in chat, Austin Helton. You've got apparently 45 seconds to say something in chat to claim your amazing $20 prize. That is, ladies and gentlemen, 1/6 of a burnt steak, but at least that's something cool. All right, good deal. And by the way, the steak wasn't burnt, okay? It was perfectly cooked, actually. It was actually one of the better steaks I've had in town. All right, Austin, go to Discord, send Slacks a message or me a message, and we'll get you. Everyone else, it's $20 for the month. You guys, I promise you guys something. At the end of it, the one thing that most people say, I'm going to write something down in chat. Ready? Watch this. Okay. Oops, hold on. After the classes, I want everybody to do me one favor. Type one sentence for me really quick. They're live classes. Yeah, Amir, they're live. So but they're not like the Zoom, the YouTube where I'm like putting on a show and trading. They're live. It's completely instructional and they're recorded. So you can come back and watch them later. Okay. Everyone type in chat one sentence that you took away from the classes that you have like, so you've had some kind of like revelation or some kind of like feeling or some kind of change. Like, what have you taken away from the classes personally? Like, what is it that you've done? What is it that you do wrong? That's my question in one sentence. If you've said, I've discovered something that I do wrong, what is it that you think you do wrong? Specifically. Bet, you know, how you bet. Okay. So I wrote something before everybody said something. This was my guess at what everybody was going to say. Most people tell me they find out that they trade too much, they short too much, and they bet too big. And there's a lot of people that said risk management, which is betting too big. They stop shorting, shorting too much. Risk management, fight the market. Short too much, shorting equities, shorting too much. One of the biggest takeaways of the classes is that you're shorting too much, which again, we've trained countless tens of thousands of people since 2016 over the dangers of shorting markets. When you short, you're shorting improperly. There's a way to short and a time to short and a place to short and an amount to short. There's a rule that we have in effect right now, and it's no shorting below the screen line. And imagine me chasing a short 100 points ago in the S&P, right? So it doesn't mean you can't short, but shorting is not statistically favorable. Therefore, you shouldn't be shorting as much as you're longing. There's time and place to short. I've got a place to short from when certain things line up, of course. But the thing is that there's a lot of people that are always fighting the market, and you're always doubting the market. About 90% of my trades are actually long trades. And this is probably the place to take the long on if I believed in this one from here. This is an entry to get back in on, and now I don't know if I want to, how much I want to put into effort on taking this one. This is a second long entry. It just proved itself. Let me double check Nvidia. If Nvidia is looking good, I'll take it. If Nvidia is still looking garbage, I'm going to sit. I'm going to sit. All right. Let me watch Nvidia today because I'm going to need to pick up some steam on Nvid. I will actually wait and let Nvidia figure itself out because there are no supports on Nvidia. If Nvidia gets right back into here and starts picking up momentum, like this setup right here, I'll take the long, which basically means I need to wait. So what I'm going to do, I've chosen to sit out right here. I'm not going to take an Nvid. This looks like shit still. I'm going to sit out. I'm not chasing the bulls on bottom long. Okay. Is there a visual on your EST trades in the Discord? There is. We haven't built it yet, but it's scribbled. If you go to the Discord, we've gone through the masterclass plenty of times, and in the masterclass, there's a bunch of like scribble drawings that are becoming visuals. We're building them one at a time. It's this guy right here in the 60 days. It's this one right here. You see that? This is exactly what I drew on the stream today. Every single time trade from here to here, bouncing there to there. Yeah. So you'll see that there's visuals here. Now I have a media person that I hired to make them into like a more like palatable, non-scribbled format to look actually a little bit better. So we're releasing those with this. So like with this course series, as we're going through it, we're actually giving you handouts you have with you, right? So yeah, the liquidity pocket class. So right now, basically what we've been doing is we've been kind of experimenting with the format of the classes. The current format is the final format of the classes. We give you a video, a handout, a video, a handout, a video, a handout, sort of thing. That makes sense. So it's all going to be there. So in the meantime, 20 days, 40 days, 60 days is us going through the classes over and over and over again. And it's just like I take the scribbles and put them in here. They're useful. I draw these in the class and I just take the screenshot of it. But current boot camp is the final version. You all need to be here, and this is where you're going to learn everything in the right order. So we've started like moving topics around, and we've experimented with the format a little bit. Yeah. So the visual on liquidity maps puts together two pieces of a trade. And again, in the liquidity pockets class, as Rich has said, is the class. So liquidity pocket is a special part of a liquidity map. These are the ones over to the left side that I'm exploiting. IPs and LPs are those every single time trade setups. If you click liquidity map in the platform, it'll show you those setups that I do. The every single time trade is a combination of, it's being clever and putting two of them together. And I'll go through the rules with you guys. Let me draw it. So the rules are pretty simple. Okay. When you go through the DD ratio class and the liquidity pockets class, you're putting two things together. And they state as follows. When this ratio is greater than half, in a liquidity pocket, which is between bull and bear zone, it tends to float towards the bull zone when the DD ratio is greater than half. It's an observation we've made. Okay. And today is no exception to that. Okay. That's greater than half. We floated up. Okay. We found as time went by was that when price is down here, it also floats up to there. And also when price pushes to there, it floats up to there as well. As a matter of fact, every single time it touches here, I either chase the long to there or I buy the dip from there to there every single time. That's represented right here. If you see right here, oh, I wish it would get bigger. It says I hit it with the normal trade if the ratio is greater than half. I hit it with the small trade if it's less than half, which means I hit it every single time. The only thing that matters is my position size. So because there's, let me get the bigger version, because there's an option to trade small or to trade normal. Do you see how there's an option? I either hit it with a normal trade or a small trade. It doesn't, oh, there's a typo there. I gotta tell her this. Oops. She put a typo there. You need to re-release that. Oopsie. Is LP that she do the same thing? No, let me tell her that real quick. Tell my media person. Hold on. There's a typo, sorry. Ratio less than half, ratio greater than half. So this is the only conditions to this, and I have a trade set up every single time. That's where that comes from. So people have been saying like EST because I always take it. All that matters is the size of the position. It's a big discrepancy. If I have the agreement, I hit it with my biggest trade. If I don't have the agreement, I hit it with my smallest trade. As a matter of fact, today, because there's a catalyst, I hit it with a very small trade, even smaller than small. So the idea is that every single time there's a setup. And of course, bear zone to bull zone over here, every single time there's a setup, with the one exception is I sit out on shorting under that particular setup. But on the long side of the market, I always long at bear zone top and bull zone bottom from these two put together. Does this make sense? Whoever asked? Yeah. The training is at 3:30 Eastern. So we just restarted the classes. We're on like number 4 right now, or number 5 right now. It's the best time to get in because you're just getting in at the start. Other than that, you got to wait a month to start over. And so you see how every single time there's a setup. So that kind of came into the every single time. From here to here, I long it. Ratio is greater than half. I hit it hard. Less than half. Hit it small. So, okay. So normal is what this is. That's the choice. I'd hit it with the normal. But however, today we are outside the DD band. So anytime I lose a piece of confluence, I inch down smaller. Medium. Catalyst active. Okay, inch down smaller. Very small. Right. So I've taken my confident normal trade and hit it with a very small trade. Monthly map was bearish. I mean, inch lower, very small. Just very small. So I take this every single time, no matter what. I exit here every single time because when you open in a bear zone, you don't expect to end up in a bull zone. That's the rarer case. So in that particular thing, you need to wait for a bull zone to confirm to trade the IP trade, which is the second trade on the liquidity map. And that's that part here, which is this one here. Bull zone to bear zone, which is here to there. Okay. Because it's volatile, and you guys remember, I drew that I'm going to let it do this and then confirm. Why did I know it was going to dip? I didn't, but the volatility is high and there's a catalyst. So I allow the volatility to be there. You see how I didn't chase along here and give out my gains? That's a smart choice. I chose to sit out on this one, the IP. The IP is very, very much as follows, right? I can take the trade on the confidence of the bounce here. And then because IP goes from here to the bear zone top, and bear zone top isn't every single time trade anyways, if you take this guy and put it below this guy is where you get the trade that goes all the way through there. So it's like piecing two pieces together, as people realize. We long every single time at this interface, here to there, every single time. So when you take the IP trade from here to here, it cascades into an every single time trade long. So bull zone, bear zone, bull zone sandwich is what people were joking around calling it, is a good trade to take as well. Only when the ratio is greater than half, and only when you get confidence of support at bull zone. So I exit my trade here to there. I let it play around. I get a second trade. I long from there to there and go. Does that make sense? So there's two pieces to this, and the IP and LP class covers this. That's why all morning you saw me draw this. Then you saw me draw this, right? And then you saw me draw this. And once we got here, I said, oh, Nvidia is the reason we're falling. Like the tech stock's the reason we're falling. Nvidia has no support. It's gapped and it kept going. So I convinced myself that Nvidia is not going to lift the market today, despite the rest of the stocks doing it, that we're likely going to pull back some. And I made a pretty good trade with no loss. My four charts that I have are SPY, QQQ, VIX, and VVIX. Sometimes I'll put the Russell IWM there, or I'll put VVIX there. In times of high volatility, I care about the VVIX, so I'm not trading the Russell. When markets are crashing, I don't trade small caps. So I switch them out. So does that make sense? C Spooey. Those that were asking about it. Master Rich. Amir. Does that make sense? So we're piecing together liquidity pockets and illiquidity pockets. The difference is like a liquidity pocket is a balanced part of the market. It's balanced. Bull zone above bear zone is an LP, and LPs love the middle. If they pick up momentum, they typically break to the upside under most conditions because the market's mostly bullish. When the ratio is greater than half, the odds of that go up even higher. This is the sum of the stock's market cap being in a bull zone. So the S&P is not going to likely be in a bear zone if the majority of the market cap is in a bull zone. It's likely to go higher. That's why the trade is really strong. S&P SPY tracks the stocks, right? An IP is where a bear zone is above a bull zone. It's more volatile. There's more volatility in the IP. As you notice, we inched up here, but in the IP, there's a lot more volatility. So this is alternating LP, IP. It's crazy. When you have them sandwiched like this, is usually a transitional market with a lot of volatility. Got to trade it very small. I'm taking pivot to pivot. I'm not over trading. And this was a great setup. I mean, this is good. I made a little bit of money in all the accounts and then I'm done. Nasdaq's probably having a really bad moment right now. And that's why when there's a catalyst active, we don't really do a lot of trading. And I don't think the market's going to crash today. But like I said, we're going to wait. All right. Hey guys, like I said, you want to do the $20 class. It's not always going to be for sale, but it's for sale now. We made it to where you guys can actually buy it. It's normally free if you're a member. But for now, if you don't want to pay the full $100 for the first month to get the platform, you just want to go through the classes. Here's what we did. We decided to sell it at Black Friday, and it was such a hit. People were like wanting to do it again. Oops. Hold on a second. And we'd love for you guys to join our community. Something's going on with the internet today. All right, somehow YouTube is like crashing. What the heck's going on here? What on earth is going on? That's weird. All right. Okay, I'm sorry. Looks like my chat was, my YouTube froze for a minute. Okay. Does that make sense? Answer your question. Okay, cool. Cool. So we made it so you guys can actually take the classes, and we just made it a meager $20 so that it was $1 a day. And we put a lot of effort into these trading materials. And it's a class on betting properly. That's it. Risk management. How'd I do today? Let me tell you my choices. How'd I do today? I waited. I longed here. Very small. Well, let me start over. I sat out from the moment the market opened. I went 8 stake. I sat out way over here. Waited, did nothing. As a matter of fact, in Discord, I said I was going to do nothing. I typed that to everybody. First thing I did when I started typing last night. This was me yesterday at 18 minutes after market open. I type in Discord. There's rules I have, irrational, none overnight. I'm sitting out, blah, blah, blah. We blasted right through, yada, yada. I'm sitting out, nothing happened. Didn't do anything, sit out rules invoked. Catalyst was active, didn't do anything, let the market crash. Wake up today, start right here. Got some indications. I launched a very small trade from here all the way to here. Every single time set up, just here to there. I missed this part, but I got the confirmation on that. Very small. Then I got out. Then I said, I'm going to wait for it to do something and then confirm. And then I'm going to long again a second time from there to there to there. How'd I do? Right? How did I do? I literally have drawn all of that. Well, it wasn't that prominent, but like it was like this. So like steps ahead doesn't mean I'm like a wizard or something. People tend to like give me more credit than they should. This is just really good educated guessing. But there's reasons I guessed that, and I'm just making stuff up. There's a reason I picked all of that. So how did I do like today? See, I did a pretty good job like drawing things out and making the right choices. I got lucky, made the trade I wanted, didn't chase along there, waiting. I'm going to wait for the confirmation, like things like that. So pretty good, right? So we think that this portion of trading is teachable. Planning your bet size and planning your entries and exits, stops, all of that. The software automatically provides these zones. It's algorithmic. The minute the market opens, it gets them for you. And the software also puts the cheat sheet next to it so you can see the pressures. An example like Nvidia on my screen here. Nvidia has pressure off of this orange line pushing down, and Nvidia is obviously doing that. Why not take another hedge pressure trade? Because whenever you are irrational, you'll lose confidence in your setup. So an example is we have a scale, right? Small, medium, normal, and sit out. Okay, this is my scale. And so a couple rules of thumb. When you trade this far away from yesterday's close, this green band you see on my screen, there's a rule of thumb. Outside of the DD bands, the market is irrational. I make long trades only, okay? And when a catalyst is active, this purple line, I usually sit out in general because the volatility is uncontrollable. So the only times I do trade is long only, and I only trade above this purple line on this normal scale. Today, I chose to take a trade inside of here, which is actually a very small trade. And we don't teach this because I don't want you guys doing anything down here. I'll do it, but I control myself by taking 2 micros. I know my risk. I don't trust that people are not going to blow up their accounts on here. So our rule is you sit out automatically down here. And I said at the start of the stream, I said, nobody do what I'm doing. You shouldn't be doing what I'm doing anyways, but definitely don't do what I'm doing today. 2 micros just to keep you guys entertained on the stream. Because if I sit here and sit out, people get bored of this. 2 minutes until the ETF contest, right? So why not take another trade? Well, because hedge pressure blue setups are already small to begin with. Okay. All your blue hedge pressure trades are already small for the most part. Number 3, small. Number 2, medium if we break up. So today is a breakup. It's a medium. Okay. So we start off as a medium already. So normally it's small to medium. Blue isn't a heavy trade. It's an 80%er instead of a 90%er. So it's already a medium. A catalyst is active and you're outside the DD. So outside of the DD band makes it a small. Medium becomes a small. Catalyst is active. I mean, one thing after the other. It's a sit out. So I'm talked myself out of it. Great question, Nadia. Because I scale my position down as I lose areas of confidence. This is one area of confidence. This is an automatic sit out anyways. I usually only take strong pivots below these green bands. And the only strong pivots that we have are MHP, which is the orange. Bear zone top, which is here, which I did, want to take. And then bull zone bottom. So the only things I do take below this green band to begin with are those 3 things. And that's the reason why, because you already lose the confidence and the irrationality to not take the blue anyways. It's already a small trade to begin with. So small trade becomes a sit out. So it doesn't qualify. So outside of these green bands, these are the only 3 long trades I do take. Here to there, there to there, there to there, and then MHP, which is like way off the boundaries. So there's only 3 long trades I take below these green bands. And that answers your question, hopefully. Do I do MHP studies for Thinkorswim? So unfortunately, those platforms aren't strong enough to do our calculations. We had to create our own trading platform to do it. So unfortunately, Thinkorswim doesn't allow you to even input data into it other than manual. And the calculations are actually done on a server. It's a very complex process. We have a lot of computers processing this raw options data to give these indicators. And so there's no trading platform on the planet that can do our calculation. That's why we had to build one. Trust me, I would have not liked to have spent $2.5 million building a trading platform. I would have rather put the indicators in TradingView. But it's the most sophisticated retail trading computation that exists, period. It requires an army of computers doing the calculations. And then it has to WebSocket connect and dump the data to you from the server. A browser could even calculate it. It's that sophisticated. So it's hard. I wish I can create indicators to go in other people's platforms. I could have saved a whole lot of money. It can't be integrated with TradingView. Same thing. TradingView is weak. TradingView is a browser-based platform. We built off of TradingView and then we souped it up. So basically, we got a license with TradingView to build off of their platform. And we took their charts and then we basically built a backend to do the crunching. So TradingView takes candle data, and then the browser turns the calculation and then it displays it on the browser. So our thing, we take the raw data, NYSE, NASDAQ, Opera, we get futures, we get all that data. It goes to like a bunch of computers on the servers. The servers like route to different algorithms and then they come back with answers, right? And then the answers are just broadcast to the platform. Just like you get candle data broadcast to your platform, we broadcast these indicators to you. It takes a whole army of computers. A browser couldn't calculate them because it couldn't parse out and roll up the raw Opera data. The options data is so numerous. Like imagine like you go open up a time and sales on NASDAQ, right? You have like this stream of data for just NASDAQ futures time and sales. Imagine you have that stream of data for every option, for every strike, for every expiration that exists. You'd have thousands and thousands of time and sales just for SPY alone. And no browser can handle that. No single computer can actually handle that. We had to write programs especially just to roll up that data to make it usable. It's just like it's like a supernova of data. There's so much data, and that's the hardest part. I wish I would have loved to keep millions of dollars in my pocket to not have to spend 3 years developing a platform. We started developing in 2020. Trust me when I say I wish I can put my indicators in someone else's platform, but you can't. Crunching raw options data is something very few people tackle. Thinkorswim gets raw options data imported to them from a roll-up company. So they get a company that already rolls up the data to be usable for you. They don't stream all the data to it, but then in Thinkorswim, you can't access the options data in ThinkScript. So even so, we couldn't run our calculations in ThinkScript because ThinkScript is a very basic scripting language, and our calculations are highly iterative, and they require a full coding language to calculate the liquidity maps because they're solving differential equations. So no coding language in any platform is sophisticated enough to handle what's needed. We had to create our own coding language called RocketScript just to run our calculations to make it even more complicated. So we had to create a platform and we had to create our own coding language to be able to do the calculations. Because PineScript and ThinkScript, they're all very weak candle-based coding language to just look at candle data and do calculations. Einstein in his lab. We're actually patenting this process. This is our next goal as a company, to take raw data into a server, to have a server process with a specific coding language to WebSocket in indicators that are server-based. All indicators and all current trading platforms are not cloud-based. They're all browser-based. So I actually invented a process to stream indicators to you from a central location, which the benefit to that as a trader is it doesn't matter how weak your computer is, you get these indicators razor sharp fast because you can have a browser, you have a really bad computer and this is downloaded from the internet. So the calculations are not done on your machine. So a weak computer can handle this. You ever use NinjaTrader? NinjaTrader is garbage nightmare when you have a computer that's not state of the art. I love NinjaTrader. I love Tradeovate. There are so many gurus out there that sell their stuff on NinjaTrader. NinjaTrader is an absolute nightmare because it requires a very heavy, high-end gaming processor, like a really fast dual-core processor with really quick single-thread application, high frequency, like high megahertz on your or gigahertz on your processor to just calculate because it's a raw single-threaded process. It's a very, very 2003 way to run a program. And it's just not updated for the modern day. Multi-core processors don't help you in NinjaTrader. And so I know people that sell indicators on NinjaTrader as a business, and 90% of their day is tech support, trying to get people's computers up to speed, telling people to buy more RAM and buy different computers and buy this and that. And so like even with a moderate amount of sophistication, because NinjaTrader allows you to code in C#, which gives you flexibility to create sophistication. Any moderate amount of sophistication, people's computers just can't handle it. NinjaTrader can't crunch it fast enough. It's absolute garbage. And so the idea is that you can't even have a local process unless the person has a fast computer to even manage something with moderate sophistication, like moderate charting algorithms. Elliott waves, harmonics, this stuff crashes NinjaTrader and people have to go out and buy. So the idea was, well, let's make it browser-based. Like I have the expensive computers on the back end crunching the numbers, and you guys are limited just by your internet connection, and which is great because on a tablet, on a phone, on a Mac, on a PC, it's the same. And so we're going to patent this process of sending sophisticated trading information to retail trading platforms via server-based logic and WebSocket connection is a patentable process. I invented it. So the idea is you can have the most sophisticated tools on the planet delivered to you without you needing a fast computer to do it. So just FYI, as 10 or 15 years go from now, as retail trading becomes more sophisticated in its approach, technical indicators become more obsolete, chart patterns become more obsolete, and new methods like this become more sophisticated. We have the patent process, or we'll have the patent process to have a more robust infrastructure such that a user with the oldest, crappiest computer can still get the most sophisticated trading tools in front of them. As Austin has realized, there's a bunch of benefits to that. Internet speed is outpacing retail PC performance. Everything's cloud-based now. Another thing is that cloud-based deployment allows me to not have you download or me release executables for you to download, as we'd have to release
an Apple version, an Android version, a PC version, a Mac version, etc. We'd have to code in all these environments if we have a local desktop app. Doesn't make sense. A browser is universal. Cloud-based means I don't have to roll out patches that you have to download. When you log in, you download the patch automatically. It's much easier and deployable and more universal, requires less staff, less maintenance. We code in one environment, that's it. So it's the modern way to do stuff. So FYI. Try Quant Tower. You can tether your DOMs together and has a copy trading bot for data and unlimited accounts, prop firms, and brokers. Cool. That's super cool. So use NinjaTrader and love it, but yes, it's processor and RAM heavy. And the problem is that like even NinjaTrader is too weak to power our stuff. It's just, and I don't say garbage in a mean way. They're all garbage in a nice way. They're all 15, 20-year-old machines. They don't do well in the modern day. Like I say, I have people that used to run on NinjaTrader that are dying for us to release RocketScript because they know the power of creating tools on the back end with our language is much more powerful than NinjaTrader. Many magnitudes of power better. So you can use the capacity, like basically if you are an indicator programmer and you want to sell your stuff and it's very sophisticated, you get a server computer that's set up with our logic and our server code and everything, and you program your indicators with our indicator language, and your customers will have zero problems at all. It'll be razor sharp, fast, everything. So, you guys Quant Tower? Cool. So the idea is that none of these platforms allow me, they couldn't crunch the options data quick enough to even produce a liquidity map. So unfortunately, the decision was made many years ago that we had to create our own platform to do it. We had to create a shell that accepted the data, and we just drew the data, and we're like, well, let's get TradingView because that's easy. TradingView is a white labelable. We just send packets of data to TradingView, and it just draws it for you. And then we have a whole army of computers doing the calculations to send it forward. So like your socket connections that get your information, if you click this little button right here, status, these are all the different live web sockets that are sending you data. Like live is sending you your candle data, futures is sending you your futures data, your futures DOM level 2, resilience and scanner. Scanner is sending you this. Resilience is sending you liquidity map and resilience. So I've got sockets of data connecting real time. And then we wrote like this thing that actually will pre-cache the data in certain tickers. Like when I type IWM, see how it just loads up like that, right? It loads the candles and loads the ticker. Watch this. Super quick. Oops. So whenever you do, let me do that again. We type in liquidity map, it just candles and liquidity maps pop up. So Nvidia, just like that. Apple. See, the first time pull is as quickly as the pre-cache pull. So look at this. Apple, Amazon. I haven't run any of these tickers today, and this is the first pull of the data. There's 20 employees of the company. There's a team of people. We work with 2 different coding teams. One of them was acquired by this company, so we bought a programming staffing company that we hired contractors through. We own the staffing company. And we have a head of development that's based in India, Amjad, you all know, who've been working with us for 6 years. Amjad and his staffing company hire the engineers to work for him, and he manages them. And then we have a local U.S. outbound projects. We send more technical projects to them. Math heavy. It's a math heavy coding group, and they do a lot of the coding, and they're U.S. based. So we give them the proprietary stuff that's enforceable by U.S. law, like IP and stuff. We don't outsource that because it can't be protected outside of the boundary of the country. So we have about 20 people that work customer service, tech support, media manager, somebody that makes all the YouTube videos for us, person that does all of our graphics, that's making the cheat sheets for you. We have tech support, customer support, 2 separate teams of engineers. One does, they all do different things. We have owners and shareholders. We're actually a corporation. The shareholders. That's a pretty big team, yeah. Awesome, what do you mean by static indicators? Phantom prints? A lot of times you're talking about like those phantom candles that show up that are like markets trading like this, and all of a sudden you see like a candle that does this, right? You know about that? What are you talking about? Oh, the giveaway. Hold up. The winners of the giveaway: Econ, Jojo, and Ian. Congratulations. Are you guys here? E space con, Joejo, and Ian, winners of the contest. Congratulations. Oh, you're talking about indicators that don't require frequent updates? Yeah, they're cached. So Austin, so you can actually probably open the console in your browser and see the caching of certain indicators. Like once the DD bands are sent forward, they're not sent again. Like the table, the calculation's updated, it's sent to the platform. When you load the platform, it caches them and they stay static. Yeah, we have some protocols like that to lessen server load. So an example, you'll see this, right? Watch, let me switch from futures. So stock is a completely different environment than futures. We have to actually open a whole nother socket to go to futures. So futures data is a different data feed. The DD bands are already like basically in the browser's memory. Yeah. I'll send you a message to Discord if you won. Congratulations, guys. So certain things are cached in the browser so that we don't have to ask the browser to recalculate them. DD bands and others are calculated once and then pushed forward one time. Yeah, into this table. Are trades executed on Rocket Scooter? Yeah, it does. So Rocket Scooter has the ability to connect to CQG, and I can execute my trades through my AMP account through here, my real AMP account I can do. So any CQG-based browser, based broker, you can connect in the browser here. So I've connected AMP. You can do AMP, Edge Clear, Phillip, Dorman, Iron Beam, Cunningham, Robbins. All of them are here. All the CQGs. So basically all of them at Trade-of-8. Trade-of-8 doesn't connect to third parties, so that's why I can't trade my trader funding programs in here, because Trade-of-8 Ninja Trader decided to not allow third parties to develop into their brokerage anymore, unfortunately. So, but I can connect my real, I trade my real brokerage account through Rocket Scooter, yeah. Congrats, guys. So Miguel, about the phantom prints, what that actually is just a late report. So what happens is there's a bunch of ways like over the count. So trading volume, you guys just see candle volume, right? Volume is not, the funny thing is there's no two data feeds are the same to a platform. Volume is a mix of like, and I think it's like 60, I can't remember off the top of my head. There's 60 different places volume's reported, okay? One of them is the New York Stock Exchange, okay? You guys might think that all trades take place on the stock exchange. That's not true. That's like one of like 60 different places. So when you buy a data feed is going to aggregate like a certain amount of these, of all the different, there's all kind of places volume take place. There's all kinds of hundreds, if not, dozens of over-the-counter type transactions, swap-based transactions, things you never even heard of that count as market volume. A data aggregator is going to choose which ones to count in the candles in general, okay? They might not count all of them as relevant volume. Dark pool, you guys know, you've heard of dark pools, right? The dark pool feed is another piece of volume. You can add all of this together to make a data feed. Places like Thinkorswim, TradingView, whatever, the data provider chooses the aggregates as what they package up, because you have to go buy all of this data separately as a data provider. And if you use like a Polygon, for example, that buys candle data, Polygon decides what of this counts as candle data. So this isn't just New York Stock Exchange data. It's a mix of everything. So what happens is sometimes these over-the-counter or dark pool or whatever are trades that took place that are reported later. Imagine that the market is trading lower and it's crashing and we sell at the end of the day. And trader A and trader B were engaged in some kind of transaction, some kind of special trade. It's like a trade structure that you wouldn't even understand. Like it's just some special special trade that these two have together. Some kind of special swap or something that allows them to trade and hedge in a special arrangement they have. And it's not trades that take place on the exchange. It's a person-to-person trade that's over the counter. And then they report it 24 hours later. They have a deadline that they need to report their trade. So the next day, price is just trucking along and trucking along and trucking along. And you have your time and sales going like this. Then all of a sudden, you see a candle that does this, right? It literally dips to like yesterday's close or something. And trading keeps happening. And on your volume chart, you're going to see a big volume spike right there, etc. But it's not a trade that took place now. It was a trade that took place probably yesterday. And in the time and sales, you'll see that trade. It'll look something weird like 402,000 shares. And it just pops in at a weird price. And then trading gets back to normal like it wasn't even there. Because it wasn't even there at that time. It was a trade reported later. But the time and sales in your candle chart, all your candle chart is doing is reading the data in a straight line and then trying to draw candles from it. And because you had this weird, obscure data piece that was reported to the exchange, later, the exchange, it's just like a river. The minute you drop your tube in the river, you start floating with the rest of the data. So it just injects right here like it's part of the data feed, and the candle interprets it that way. But it's not an order that was reported, or not an order that took place now. It was an order that took place sometime previously and then was reported now. So those phantom prints are absolutely meaningless, and dark pool are absolutely meaningless to current trading because they're old orders that already took place. Does that make sense? Answer your question. So those phantom prints are usually people that filled a position yesterday and don't want to report it till today. There's rules of every dark pools and all these other type of over-the-counter have rules of how long they have to report an over-the-counter transaction. And all those phantom prints are over-the-counter transactions that took place outside of the purview of the exchange, and they report it later. Incredible to know how I'm a resource for all this stuff and how I know all this. 15 years in the game, man. I've been here forever. But the question is, do they mean anything? And the answer is they don't. Ignore them completely. All they do is fuck up your indicators. And in Thinkorswim, you have an ability to remove those candles, by the way. Let me show you if I can find one. Let's load up on SPY and see if there's one today. Yeah, like check this out. Here we go. Right? Watch this. Let me teach you guys something. That's why people like the classes. I think they enjoy the fact that we are kind of a wealth of information here. Right? What happened with this thing on SPY? Is that a real candle? No, it's not. If I go to a tick chart, watch this. Let's go back to 7:30 in the morning on a tick chart. Look at this. There were no candles. It was a single order that was reported here. There wasn't even a lot of volume. It could have just been a small order. It could have been one contract or one share for all you know. You can actually left click on the candle, right click, and do correct this bar. And you can actually go in there and change the values. You think it's messing up your indicators if you use open, low, high, close, for instance? Let me go to the low. I can remove the bar altogether. I don't know why it's not letting me correct this. Oh, here it is. So I don't want it to go to 590.3. I just want to remove this tail altogether. Let's make it 596. Watch this. Why is it not letting me correct the candle? Well, that's weird. Maybe I'm missing something. Enter values for correction. 5. Oh, there it is. 596. Oh, 593. Oh, it has to be. Oh, it has to be less than the open. That's why. Okay, so 595.5. Watch this. I just removed the tail. So you can actually correct your candles to remove that. Thinkorswim aggregates that data and it's part of their data. Their data provider, whoever it is, gives them those phantom candles. I remove them. Easy as that. Does that make sense? And then the candle's gone. You can remove it on any time frame. So on the 1 minute candle, let me repeat the process. Correct this bar. I have to make it less than the open. So 595.5 is what I did, right? And then it just goes in and then it removes bar. Here. I made it short. I can make it whatever I want. It's not a real thing. So record it. Yep. That's all you do. Ignore them. They show you that somebody made a trade at that price before. It doesn't even have to be big volume. It just has to be any kind of trade. It could have been one share, which is why it's insignificant. As we looked on the tick chart, there wasn't a lot of volume, right? It wasn't even a big order. A tick chart would have had a volume spike if it was a big order. And even this little spot right here, it wasn't that big. It was pretty much in the range of average volume. Like, look, right here, there wasn't even anything. It's pretty low. So it was a late print from some point somewhere of a very small amount of shares, and it just printed late, which is why it's insignificant. A lot of people think they're meaningful, but they're only meaningful if they have big volume. But even so, it's an old trade. It doesn't even affect the market now. HP Reclaim, let's check it. All right, guys, I don't think I'm gonna be trading no more of this. I'm gonna wait all day till we get back to bear zone. You guys know me. That's the trade I want. I'll get it if I get it. I'm done. Good day today, y'all. I appreciate y'all sticking up, hanging out with us every day. I think Nvidia will recover tomorrow. I don't think so. This is not good news for Nvidia or tech in general. This is bad. This isn't a single catalyst for them. Do I think the index will recover by tomorrow? I do. This is going to crash Nvidia for a significant period of time, which is going to be bad for the market for a significant period of time. This is really bad for Nvidia. This is going to be multiple days for Nvidia. Do I use or have open Thinkorswim while trading? Yeah, I do. I usually leave it open because Rocket Scooter doesn't have tick charts. So I use Thinkorswim just to do my tick charts. So that gives me a little extra information, and I leave that open just for that. Okay, guys, don't forget, take the classes. $1 a class. You will learn everything we know. My name's Matt. I'm a live futures trader. I've been trading for 15 years. I've been streaming since 2016. I'm one of the OGs of streaming. Built the Rockscooter trading platform. Invented a process to find liquidity in the markets. Volume prediction techniques are what we do. Risk management and position sizing is what we specialize in. Market avoidance strategies, all the things. Actual betting strategies. If you feel like you need something in your trading diet and all you've been doing is a bunch of complex charting, studying charts, multi-time frames, styles of indicators, we are something completely different, and we've thrown all that out. We do something simpler, manageable, and we focus on position sizing and betting mechanics as the core of a trading strategy and risk management. If you don't have that, you're not going to ultimately make it as a trader. Your indicators are random. If you're betting wrong, just like in poker, you're never going to win at a poker table because your betting is bad. Betting is everything to trading. You can even randomly long the market and make money as a trader as long as you bet properly. We prove that with the program. We teach that in our courses, actually, that betting properly is the key to doing well as a trader. We can't promise you'll do well as a trader, but that is the key to do well. If you don't do that, you'll never do well because no one can predict the stock market. It's random. Your indicators are not going to do the heavy lifting. You need to bet with the hand you're given and understand the conditions you're in. If you struggle, if you're making winning trade, and you lose it all in a trade, it's because your betting is bad. We'll hopefully give you some tips and tricks. For $1 a day of these classes, you guys can check them out. $20. The link I just posted gives you all the access to those courses right here. And go through the 20-day boot camp. There's a reason people say it's life-changing. Go read the reviews. I love you guys. We'll see you later. I'm out.